Trading. I'm Tom McKenzie, and here are your top stories. Inflation Day, key prints on both sides of the Atlantic will offer clues on the future path of interest rates. European futures are mixed, but global stocks climb, set for a second straight quarterly gain. Donald Trump has been charged with allegedly paying hush money to a porn star and will be asked to enter a plea as early as Tuesday, his lawyer says. The 45th president calls the action political persecution. Plus, Finland clears its last hurdle to NATO membership after Turkey voted to approve its entry into the alliance, reversing earlier objections. We'll speak with Finnish Foreign Minister Pekka Haavisto later this hour. Let's take a look at the futures then, with the context that we are looking at global stocks notching up, it seems, on the course, on the action to notch up close to its second quarter now, second quarter of gains, despite, of course, concerns about those higher interest rates, despite the reiterance and reiteration from Fed officials just in the last 24 hours or so that rates do need to go high, despite the hand-wringing over inflation and recession risks, and, of course, the banking crisis. 2 straight quarters now for global stocks of gains. Across the markets then, just in the first few seconds of the open this Friday morning, the FTSE 100 is flat. The futures have been pointing in this direction, maybe a little bit of profit taking, but the sentiment remains broadly positive in light of those challenges. And despite those challenges, again, Fed officials coming and reiterating, the likes of Susan Collins, that you do need to see higher rates for longer to get inflation back down. We're getting those prints out from Europe and, of course, the PCE deflator indicator out of the US later today. The Spanish IBEX currently gaining 0.3%. Over in France, gains of just a little over 0.1%. FTSE 100, as I mentioned, currently flat. Let's move it on, see how things are playing out cross-asset then. We have the focus, of course, within technology, given the run-up in the NASDAQ. 20% of the gains for the quarter, approximately, back in bull market territory, again, on bets that the Fed is going to have to cut rates towards the end of this year. That is not consensus, but it is a view coming through from some of these markets. The positioning around a 4.3% of 8%. And Brent, $79 a barrel on Brent. We have, of course, the data coming through from China. We're going to unpack that, but the services and construction coming through very strong indeed, the strongest since around early 2020. Are investors underestimating the catalyst coming through from China's reopening? But let's get back to the inflation picture then. Another big day for European economic data. French inflation has eased for the first time in 3 months, which follows a slowdown in other Eurozone economies, while headline inflation has declined as those energy prices drop. Underlying price pressures do remain stubbornly sticky. For more then, we are joined by Bloomberg's cross-asset strategist, Ven Ram. Ven, good morning. Always great to get your insights on the inflationary picture and the implications then for the central banks. What do you expect from today's European inflation data? More importantly, how it feeds into the decision-making of the ECB. Does it change the calculus?
Morning, Tom. I don't think it changes the calculus very much, simply because what we are going to see this month in terms of energy price is that because of the base effects of energy prices, we are likely to see slower inflation. But the median forecast for today is that it will slow to 7.1%, which is pretty much an appreciable drop, no doubt. But even if it lands there, that is still way too high for the ECB. As you know, the ECB has penciled in a rate of 5.3% for this year. So we're still talking about a 2 percentage point gap between what the ECB would like inflation to be and where the inflation is actually landing. And therefore, it's not a big surprise that we have seen ECB speakers emphasize the importance of fighting inflation, especially in the aftermath. And those comments have come in the aftermath of Credit Suisse gunshot takeover. And my thinking is that given its own projection, they will need a policy rate of at least 4%. So yes, Tom, I don't think this is going to make a whole lot of difference for the ECB's calculus.
Okay, they'll need a policy rate of at least 4%, is Venram's call. Let's switch focus then, Venram, to what is happening in the US. PCE inflation out later today. We know the importance, or at least the scrutiny, that that data set gets from Jay Powell and co. It's expected to show that inflation remains pretty sticky, pretty high in the US. If it comes in lower than the estimates, do you think it changes the calculation for the Fed at this stage?
Again, it's a pretty similar picture in the US, Tom. We are expecting a print of 4.7%, which, as you said, is lower than what we would expect. But again, the way to juxtapose that is to look at the PCE projections made in the Fed's summary of economic projections that we just got 2 weeks ago. And what did that show? That showed that they are targeting, at least for this year, a rate of 3.6% on the core PCE. And 4.7% is nowhere in the vicinity of 3.6%. So they will think that, look, they need to push the labor market a bit more. The labor market is a bit too tight for them, and they need to align that in terms of the demand and supply gap that we see in the economy. And therefore, they will keep going, which is why, given the relative calm that we have seen in the markets in the past couple of days, this week, if you will, we have heard from James Bullard, we have heard from Susan Collins, we have heard from Tom Balkin, all pretty much reinforcing the same message that, look, rates will need to still rise here. I think they will get to 5.25 and then pause and take stock. But I do think that increasingly the conviction in the markets is that they will get to 5.25.
Okay, you think they get to 5.25 and stop? We're about 5% at the top end, of course, of the central rate for the Fed. Think you get another 25 basis points coming through, and of course, weighing up the comments from those Fed speakers. Susan Collins, of course, not a voter, but her comments yesterday, informative nonetheless. Venram, thank you very much indeed on the inflationary impacts and the response from these central banks. The other major story for us today is what is happening with China's economy. It has kept up its momentum, certainly in March, with the non-manufacturing PMI soaring past expectations to a 12-year high. Let's bring in Bloomberg's Sophia Horta-Acosta in Hong Kong, someone who has been pointing to the fact that maybe investors are underestimating the impulse coming through from China. Sophia, really appreciate your insights this morning or this afternoon for you. Why were the reports so much better than expected? What is driving this recovery that we're seeing in China that you've been flagging for us?
Expectations are incredibly low, Tom. I mean, there's so much skepticism over the reopening of China's economy. Remember in January, everyone was saying that there was going to be a massive wave of COVID and that the economy was going to take a big hit for that. That didn't happen. Again, you know, the numbers in February were a lot better than expected, and the March numbers now really reinforcing that. Importantly, Tom, what's driving this? What's driving the recovery right now? It's not exports. It has nothing to do with global demand, where a lot of economists see risks there, obviously, because markets like the EU and the US are incredibly important for Chinese exports. But what's driving this is domestic demand. That's starting to kick in. We're seeing evidence of consumption. We're seeing evidence of investment spending, and really that construction number was really important as well. And business sentiment, private business sentiment, is also ticking up. Let's not forget that this was a week where Jack Ma resurfaced in mainland China after being abroad for well over a year, and also Alibaba and JD.com planning to raise funds in the primary market for the first time in a long time. So all this positive news coming out of China, it really, for me, it's kind of baffling. Why is this not a story that everyone's focusing on? I do think markets are so obsessed with the negative narrative that it will take a lot for people to really believe in this, even though this number, as you say, a 12-year high for the services PMI, Tom.
And Sophie, look, you talked on the importance of what's happening in the tech space, and it's really remarkable just how quickly things are evolving. The news from our team on the ground around JD.com and potential IPOs there. You've got Cainiao, part of the Alibaba group as well, looking to raise funds, maybe list this year. Talk to us about the implications for these moves for the broader tech sector in China and what it tells us, what it signals about the government's stance now on tech.
That is really the key point, Tom. It's really, I mean, nothing could really be done without the implicit endorsement of Beijing, and that's really what this is signaling to the market, is that big tech in China. This is the industry that's been in Beijing's crosshairs since 2020, when that kind of last-minute canning of Ant's IPO. Ant is, of course, was controlled by Alibaba. Now the signal is very much, look, you can raise funds again, you can come to market, and the fact that these companies have the confidence to come to the market means that they know that there will be investor demand for it. You know, why would you come to a market that has no faith in it? So it really not only shows that, you know, that the government really endorses it and supports this. Again, that narrative coming out of new Premier Li Qiang's speeches this week in Beijing, speaking to the private sector, you know, saying our priority this year is really to revive business confidence, but also suggesting that the market may be ready to absorb this kind of issuance. And if you look at HKX, that's the Hong Kong exchange operator, they're really benefiting from this story. The expectation is a lot of these listings will be not in the US, where there's obviously the geopolitical risks there, but in Hong Kong, where these companies could potentially fetch a much higher valuation.
Our markets pro over in China, Sophia Horta Costa, always excellent. Thank you very much indeed joining us out of Hong Kong. Let's check in some of the sectors then as we weigh up that better than expected data coming through from China. Again, particularly around services and construction, very firmly in expansionary territory. Manufacturing PMI coming in a little bit softer, but still, again, in expansionary territory. So basic resources, currently the sector across Europe gaining 0.7%. There's the retail picture as well, given a very strong day yesterday on the back of the surprise profit beat coming through from H&M. Retail as a sector in the session today, so far in the first 9-10 minutes, up 0.7%. And energy, which has been under pressure, of course, with what's happening across Brent and WTI, coming up 0.2%. We just break out what's happening in terms of Brent and WTI. Brent currently at $79 a barrel. It's flat, effectively. WTI holding above $74 a barrel. That's a gain of 0.2%. Coming up, as the first quarter comes to a close, we check on market performance over the past 3 months, and what a remarkable performance it has been in light of all these challenges. We get the details next and the context. This is Bloomberg.
What do you like most about your job?
I think the people. I mean, ultimately, we're a people business. A lot of what my job is as CEO of the company is to give those people sort of motivation, to tell them where we're going, to encourage them to come up and do their best work, to encourage them to collaborate. Sometimes you sort of think you're almost a psychologist, you know, as you are a business leader, I think, sometimes.
And so what's your best piece of advice?
I love pitches. I love being sort of leading from the front, if you like, and spending times with teams. I love to see the work that we're doing. When we pitch for a piece of new business, often when we come together. So I guess I try and put myself in the seat of the client. And what's the client going to think when they see this work? Are they going to be excited? Is it going to turn their brand around? How's it going to resonate with their consumers? So as much as possible, I think probably I try and play that role.
To the world of business. Balance of Power is now live from Bloomberg's Washington headquarters at a new time. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis from and about politics' biggest power players. Balance of Power, now weekdays at 5 p.m. Eastern, only on Bloomberg, your global business authority.
Was going to keep Green World Cup. This is a 3.
As the economic picture down.
The OK is getting ready to make a decision.
the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question.
That's a question I get all night.
Bloomberg, top experts, great questions.
I currently anticipate some modest additional policy tightening and then holding through the end of the year. Of course, I'll be carefully watching a range of indicators, including data on inflation, spending, labor markets, and financial conditions.
Boston Fed President Susan Collins there stressing the need for lower inflation. Let's check in on how these markets and different asset classes have performed over the last quarter in the face, of course, of still persistently high inflation, recession concerns, the banking crisis, and of course those central banks pushing rates higher. The Nasdaq then, and that is the standout really over the quarter, gains of 18.5% for that tech-heavy index. So the bet's there that the Fed is going to step down in terms of its focus on inflation, its focus on rates, and that is given support for the tech sector. And whether or not that continues is going to be a key question going forward. But now the Nasdaq is back in bull market territory. The S&P 500 has posted gains over the quarter of 5.5%. Again, given the context around the banking crisis, the three banks that failed in the US, Credit Suisse here in Europe, and the concerns over recession risks being flagged by these bond markets, to some extent, it's pretty remarkable to see gains and the persistence, the resilience of these equity markets over the last 3 months. And here's the picture in Europe. Gains of 7.3%, so Europe has outperformed the US over that time frame. The FTSE 100, which put in a pretty decent performance relative to other indexes last year, actually underperforming versus Europe and the US, gaining 2.5% across the main European UK index. Currently, in the session today, the FTSE 100 at 7,638, a gain of 0.2%. Let's break down these markets then, get the implications across what is happening across central banks and that fight against inflation, what it means for these asset classes in the weeks, quarters ahead. Diana Robinson is Head of Investments and Advice at the UK JP Morgan Private Bank. Diana, thank you very much for joining us. Let's start on the central bank question then. The bond market's flagging recession risks. Investors starting to position for maybe a terminal rate of 4.3%. The upper level are at 5% at this point. Officials from the Fed consistently saying, despite the banking crisis, that they need to push these rates higher to get inflation under control. What is your estimate of the trajectory for rates in the months and quarters ahead?
So I think one thing is interesting to step back for a moment and just think actually how clever the central bankers have been in looking at this banking crisis and making a differentiation between what their tools are to fight inflation and what the tools are to fight liquidity. And I think what we've seen in the past week is a tremendous recovery in confidence and people believing that they do have the tools to fight the liquidity problems and hence able to look at the inflation issues.
Do you think that confidence can be sustained around the banking sector?
I think the confidence can be sustained. Everyone always asks the question, is it unique or is it systemic?
Yeah.
And I think my answer is, could it be both? So it's unique in that the circumstances around both SIVB as well as Credit Suisse have some peculiarities to them. I think the systemic part is not so much in the banking sector, but overall in the economy, that what we are seeing is a world that is moving from lots of easy money to higher rates. We saw the fastest increase in Fed tightening in 20 years. That has to come with it, which is the Fed's intention, some slowing of the economy and hence the inflation outlook.
But that relative relief now around the banking sector opens the door then for the Fed to go another 25 in May. Is that your estimate?
That's our forecast.
And do they cut then towards the end of this year? Do they go 25 and done in May?
We think they pause, but we actually do have a cut coming. We are forecasting a recession beginning sometime in Q3, and as a result, we think the Fed starts to cut by the end of the year.
And where do you think terminal rates end at the end of the year then?
We have something around where we are now, not too much in terms of the Fed, but we do have a lower 10-year at the end of the year.
4.75 to 5%.
Yes, exactly. And then on the 10-year, we actually forecast it to go sub-3.
Sub-3 on the 10-year
by the end of the year.
Have you been surprised by the resilience of these equity markets?
Very. I'm probably most surprised by the NASDAQ, but then when I thought it through more, it actually made sense. So initially, our call was for the leaders of the last cycle, which if you think were driven by easy money, long-dated securities such as unprofitable tech, high-growth tech would be the most attractive. I think what happened in the most recent upturn with the NASDAQ is it's quite a narrow rally, the market is actually extremely narrow and very focused on the very largest mega cap names, which give you the benefit of having growth, which is worth more in a in forecasted lower rate environment, and also you have the safety and security. Whether that continue to be the leaders in the next sector, we're a little skeptical of the next cycle.
So you're not sure that tech has further to run from here?
It probably doesn't go down, but I don't think that we've got the legs in it that we're seeing at the moment.
And you need to see that. Do you want to see that breadth across them? Do you need to see that breadth before you lean into this rally?
I think so, yes. We're a little bit more focused now on continuing to focus on the recession trade, which I think is keeping it kind of simple. Last year was a bruising year in financial markets for our clients. And so people are very focused, and we are encouraging them to be focused on keeping it kind of simple, looking at short-term dated bonds, as well as maybe a little bit on the long side as well. We saw just last week how reinvestment risk can quickly become a real thing. And so thinking that all you need to do is roll your short-term paper, people are beginning to realize there's some benefits going out a little further in the curve, and we would agree with that.
We've had a reminder today of China as a force on this global economy, and particularly the tech sector as well.
Yes.
And I think that is really significant. And certainly our markets team, Sophia Hill-Cotter, has been writing about this.
Totally think she's spot on.
Are markets underestimating the opportunity coming through from China, and how do you position around that?
So yes, we do think the markets are underestimating the opportunity around China, and I think what Alibaba has done is splitting their organization into 6 pieces is really a nice bookend to what we saw in November 2020 when the Ant Financial deal was pulled. And I think this is a big indication that the government is going to be a lot more friendly towards these larger private companies. That's not to say there's not risk. There's always risk in that market, and we prefer, if possible, to invest either in mutual funds where you have a professional manager, or even use some kind of structures that give you downside protection.
Where's your strongest conviction at this point?
Near term, my strongest conviction is in fixed income. I know it's really boring.
What part of fixed income?
I would say 5-year IG corporates, keeping it very simple, giving you a nice sort of 5% coupon, the ability for capital appreciation if we're right on our call on the long end, and lots of security.
5-year IG corporate is the call. Opportunities in China, and a 10-year sub 3% by the end of this year. Really great analysis, really great insights. Really appreciate your time. Thank you very much indeed. Diana Robinson,
thank you.
Of course, coming through from JP Morgan's Investment Bank UK. Thank you for the analysis. Right, coming up, after the most tumultuous month since the 2008 financial crisis, banks are finding themselves in an impossible position. We're going to dive deeper into that next. And of course, the messaging coming through from the Biden administration around changes in regulation will be consequential. This is Bloomberg.
Coming out of World War II into the 1950s, you mentioned that the Fed had imposed yield curve control, basically to finance the wartime deficit. They were trying to move off of that. These are all sort of familiar themes to anyone in 2022, but why was that difficult for them?
Well, so let's get a sense of scale, right? Mm-hmm. So in 1941, there's about $40 billion worth of treasuries outstanding. In 1945, there's about $240 billion worth of treasuries outstanding. So that's about double the pre-war GDP. If you scale that to 2019 and say, okay, COVID expenditures on the scale of World War II, that's about $40 trillion. And the question is, who's going to buy it? Yeah. And
so what we're dealing with is kind of nothing. We got it.
In that context. And so that's where I guess the analogy breaks down. But it's a very difficult problem, which is who's going to buy the equivalent of $40 trillion today in debt?
From our studios in New York and San Francisco, our new hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech at a new time, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
And welcome to Balance of Power.
This is Bloomberg.
Welcome back to the Open. We are 23 minutes into the European trading day. Checking in on your benchmark gains, modest gains of 0.1%. Futures in the US also pointing up, but not by a great deal. The Nasdaq futures are currently flat, but remains, of course, in bull market territory after a very strong end to the quarter. Now, if you want to understand the drama of the past month, look no further than US money market funds. A record pile of cash has flooded into the instruments as investors shun traditional bank deposits. Now, the $5.2 trillion buildup could threaten additional strains on the economy. For more, let's bring in Bloomberg's Danny Berger. Danny, why do we need to be focused on what is happening in these money market funds?
Well, we're trying to understand at this moment in time just how much tightening is going to result from the most recent bank run. And piles of cash in money market funds will, I mean, just as a matter of mechanics, because money from these funds, it invests in short-term treasuries, short-term debt type instruments, but it doesn't do so through banks. It does through a Fed facility, which essentially means this money just disappears from the system. It's no longer with banks. Less money with banks means that they have less to lend out. Less lending means slower economic growth. So overall, it's bad for banks and the economy. And yes, the Fed wants to slow the economy, but this is kind of out of their control.
This is arguably, or was, fairly predictable, given what we're seeing in terms of the rate rise increases coming through from the Fed. Has Janet Yellen, the Treasury Secretary, she's taking notice now. This is a concern. Yes. This has landed on her desk, or even landed on her desk. She's picked up on this as a threat,
Yeah, she talked about this during COVID. She's talking about it during again. At a National Association of Business Economics speech yesterday, she said, if there's any place where the vulnerabilities of the system to runs and fire sales have been clear-cut, it is money market funds. The financial stability risks posed by money market and open-end funds have not been sufficiently addressed. It is this fear of non-banking financial institutions that if there's all this debt sitting outside of the banking system, they can amplify market stress. It's exactly what happened during COVID. We had this run out of money market funds because everyone wanted cash. There wasn't enough liquidity. It brought the financial system to extreme stress, and the Fed had to step in. And there was way less money in money market funds back then. So what happens if we get a repeat and there's $5.2 trillion in these? That's the fear. And Janet Yellen, among others, is saying something needs to be done. There needs to be more regulation and more oversight.
So it's a question of regulation. Is it also potentially a question of quantitative tightening having to be stopped by the Fed? Is that what it comes down to? Ultimately, they'd have to stop QT?
It would, because if we get a pullout of these funds, if there's a run on it, the Fed will have to provide liquidity, which is not QT, it is QE. So that is the fear, and it could also cause a tightening much quicker than the Fed wants, because again, the Fed doesn't control this. They control banks. They aren't set up to deal with money market funds. So they need a different mechanism. They need more regulation. They need something to make sure they can get a better control on this.
Really interesting. Danny Berger bringing us back down to earth after what has been a pretty solid quarter, of course, with the risks around these money market funds and what it could mean for the Fed and regulation. Danny, thank you. That is the subject of today's Big Take, which, of course, you can read on your terminal at NI Big Take Go. Coming up, Finland's NATO bid clears its last hurdle. We're going to be speaking to NATO's Finland, I should say, foreign minister. That is coming up next. This is Bloomberg.
is the chance of humankind to really understand itself. How much of that is true? How confident? Did you actually overachieve? Did you, back then realize that we would be using AI in many different jobs? Was it slower or faster than you thought at the time?
I think if I had a 35 or 40-year prediction task, I would have been more or less on track as to where we are today. But I would have predicted steady linear increase over time. But instead, the field had very minimal improvements until the last 5 or 10 years. Then it really took off. I think we ended up in the right place, but I was very wrong about the trajectory. To this date, we still know very little about how the brain works, but these machines are getting ever more powerful. And I feel in some sense, we did end up learning what human intelligence is by learning what it is not. If we exclude all the things machines can do better than us as what makes us unique in our human intelligence, then now we can rule out many, many things, because AI or machine learning has become so good at so many things that what's left must be the key aspects of human intelligence.
Welcome back to the Open. We are 30 minutes into the European trading day, and here are your top stories. Inflation day, key prints on both sides of the Atlantic will offer clues on the future path of interest rates. European equities tick up as global stocks climb, set for a second straight quarterly gain. Donald Trump has been charged with allegedly paying hush money to a porn star and will be asked to enter a plea as early as Tuesday. That's according to his lawyer. The 45th president calls the action political persecution. Plus, Finland clears its last hurdle to NATO membership after Turkey voted to approve its entry into the alliance, reversing earlier objections. We're going to speak with Finnish Foreign Minister Pekka Haavisto in just the next few minutes. Let's check in on these markets again. The headline, of course, for us, that we are coming to the close of another strong quarter, another second quarter of gains for these equity markets, most pronounced, of course, within technology. Today, across the benchmark here in Europe, we're seeing gains of 43 points, 0.1%. The DAX is flat. The FTSE 100 is up just 0.1%. Maybe a little bit of caution setting in, maybe a little bit of profit taking again after a very strong quarter, particularly within the context of high rates, concerns about inflation and recession, and of course, the banking crisis. Let's switch it over and see how things are playing out across these sectors. We had Fed officials, 3 of them, coming out in the last 24 hours, flagging further rate increases. The markets, though, see a step down in the terminal rate by the end of this year to 4.3%. Does that disconnect continue? Who wins out in this narrative? That remains, of course, a point still of contention for these markets. Across these sectors then, retail at the top of the list, 0.9%. It's been a strong week for this sector. H&M coming through with some earnings that surprised to the upside. And that optimism continues around retail as it faces, of course, those risks around inflation, inventories, some of that being cleared out. That was the news for an H&M. Food and beverage also near the top of the list. A few sectors, though, still in the red, but the action, again, is more muted in the session today as we close out this week. Bottom of the list is real estate, and some of our analysts and guests have flagged this as a potential risk, particularly in the US, as rates continue to rise. Banks currently down 0.6%. Let's get back to the geopolitics then, and this is a really significant and historic day, particularly for the country and nation of Finland, because it has cleared the last obstacle to joining NATO. That's after Turkey's parliament unanimously voted to approve its membership. It means all 30 members have now ratified Finland's bid to join the defence alliance. Let's bring in Bloomberg European correspondent Maria Tadeo. Maria, what is the next step then in this process? This is a big day for NATO. It's a big day for Finland.
Well, it's history in the making, Tom. It really is, and it's one of those big ramifications of the war in Ukraine that we talk about for a country like Finland to join NATO, which essentially gets the go-ahead and now just needs to deposit some documents before it officially becomes a member. And to talk about this, I am pleased to say we are joined by Finland's Foreign Minister Pekka Haavisto. He's joining us on this day, which we are seeing obviously for your country. This is truly history in the making. And sir, I wonder, are you happy, relieved? And ultimately, the big question, is your country safer today?
Well, I'm quite happy. I have to say that this is a day of joy for Finns. We have been working for this NATO membership now more than 10 months and first waited for Hungary to ratify our application. And now we got the good news from Turkey last night. Foreign Minister Çavuşoğlu called me and was bringing this good news in the midnight.
And sir, you have to now, if I believe this is correct, you have to just file some final documents, but this is something you can do, your government. When are you expecting to do this? And when does Finland essentially become the new member? Is this a matter of days, weeks now?
Well, it's probably a matter of days. First, both Hungary and Turkey has to deposit their own ratification documents to Washington. I have been informed that Hungary will do it now, actually on Friday, Washington time, and then Turkey is planning to do it probably on Monday and so forth. Then comes the invitation to us and we will deliver our written documents to Washington. So it's a question of days if everything goes smoothly. And of course, next week we have Tuesday, Wednesday, a NATO foreign ministers meeting in Brussels, and hopefully Mr. Stoltenberg is already digging the hole for a new flag pole in Brussels.
Okay, just a matter of days then. Sir, good morning. Thank you for joining us on this historic day for you and the nation of Finland. What does that mean materially on the ground in Finland in the months and years ahead, the membership of NATO? What does it mean in terms of defence spending and the additional military capacity of Finland?
Well, first of all, of course, we have so far been taking care of our own security. We have a big reserve. We have a conscription army in Finland. We have been investing to new fighters, for example, F-35s and so forth. So I think our military is in a good shape. But of course, joining NATO means that we will be covered by the Article 5. So any difficulties which appears to us or any other NATO country, the whole NATO will defend that country. And in these days when we are witnessing a war in Europe, the Russian aggression against Ukraine, this is a very important step.
There was an aspiration, of course, that Finland and Sweden would join at the same time. We know that because largely of Turkey, Sweden will not be joining in the near future. Has there been any discussion, sir, about holding off on passing through those official documents from Finland until you get more clarity from Turkey on its stance vis-à-vis Sweden? How detrimental is it to NATO that you're not joining at the same time?
Well, of course, our biggest wish was that we could do this at the same time. We applied at the same time and we were wishing to be members at the same time. Unfortunately, due to processes in Hungary and Turkey, there was a separation of Finland and Sweden. But this, of course, means that we continue our very, very close cooperation with Sweden. We hope that Sweden will be member before the coming Vilnius summit of NATO in the coming July. And this is a period after the Turkish elections, this period when also Sweden will impose their new legislation on terrorism and so forth, which has been a question with the Turkey. So I think the elements are there, and I hope that we shouldn't need to wait Sweden for a long time.
And that's certainly what Sweden is hoping too. As you said, you wanted this to be a double bid. Obviously, now it has been split. But, sir, I do want to go back to Russia. We have seen Vladimir Putin say potentially station tactical nuclear weapons in Belarus. Yesterday, a reporter was detained. And we have seen just this general toughen-up line from Russia. Do you wonder or worry about potential retaliation? Remember, the Russians said they did not want NATO at their doorstep, and that's essentially what they get now.
Well, of course, first of all, our common border, we have 1,300 kilometers, 800 miles common border with Russia. This border has been maintaining peaceful. Actually, Russia has been even withdrawing some of the military and some of the material to Ukraine and to the Ukrainian front. So we cannot see any direct threat from Russia. But of course, this whole war in Europe is concerning us because, as we always know, in war, new things can happen and surprises can happen. And of course, the news that tactical nuclear weapons will be stored in Belarus, it's not good news for the region. And we have always also saying that issues like the explosion of the Nord Stream pipeline and so forth, it was very close to us. So the war had implications also to Nordic countries and the Baltic Sea region.
And your country, too, is very sympathetic to Ukraine. You really have said from day one, stand with Ukraine. Of course, now enter the Chinese government. They say they have potentially a proposal for peace. Do you wonder, sir, and this is a very delicate question, but I have to ask you, do you believe China is being honest here? Can they really broker an honest peace deal? Do you trust them?
But first of all, we really have been giving, as Finland, almost 1 billion euros worth military help, direct military help to Ukraine to continue like that. Of course, we were very curious when China said that they will publish their peace plan for Ukraine. We haven't seen any real steps toward that issue. China has always been raising up the territorial integrity when it comes to their own region. And I think it would be very helpful if China underlines the same principle also vis-a-vis Ukraine. We haven't seen that yet.
And just, sir, before we let you go, one question on that land border. And you flagged this, that 1,300-kilometre land border that Finland shares, of course, with Russia. What does this mean for NATO? You're joining the alliance and the protection of that border and the integration of your military forces with other NATO members in terms of the capabilities of NATO. How does it change the calculus?
Well, of course, NATO has to now enhance the military planning to this region. And I have to say that we also need Sweden to the military planning, because when you look at the security of Finland and the depth of the defense and so forth, it's very difficult to plan a defense in this region without Sweden. But definitely now we are having more exercises with NATO and NATO countries, certainly in the military planning. NATO will take out the possible risks for Finland and so forth. But we also underline that we have a very strong military. We invest to our own military and military equipment. So NATO is, of course, additional security guarantee for us.
Okay, well, we thank you and we appreciate your time. Finland's foreign minister on this historic day for Finland, of course, and the NATO alliance, Pekka Haavisto, and, of course, Bloomberg's Europe correspondent, Maria Tadeo. Right, coming up, we are live from the Ambrosetti Forum in Tionobio, Italy, with Eric Lee, chairman at Chungwei Capital. Stay with us for that conversation. This is Bloomberg.
Replicate Tesla. Tesla is a unique because when they founded and then the personality behind it, the product is beautiful, technologically very, very strong. So in many areas, Tesla is Tesla, but XPeng is XPeng. We want to focus on what we think is important for our customers. Our customer like beautifully designed vehicles, either it's large SUV or sports sedan. We believe we have a very, very appealing family look that our customers is really attracted to. They like to have user-friendly features inside the cabin that has a technology feel. It's very smart. It enables them to really utilize the vehicle that's different.
critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
The top names in business are on Bloomberg.
Do you foresee a future where JP Morgan could potentially re-enter the Russian market?
One day, maybe, but it's very possible that won't happen in our lifetime.
Nobody covers business like Bloomberg.
Welcome back. The 34th Ambrosetti Forum is kicking off today in northern Italy. Top business executives and policymakers will discuss the outlook for the euro area economy. My co-anchor, Francine Lacroix, is there with a guest. Fran.
Thank you so much, Tommy. We talked, of course, about the banking crisis. We talked a lot about, the shadow banking with Mohamed El-Erian and Ellen Zentner. I'm delighted now to be joined by Eric Lee from Shengwei Capital. Eric, thank you so much for joining us. Now, you're one of the first venture capitalists actually in China. You started about 22 or 23 years ago. Yes. What can you tell us about China right now that people misunderstand?
Well, in the last 2-3 years, the Chinese economy has been going through a rather drastic transition, or restructuring, if you will. The last 20 years, the three major pillars of our growth: real estate, consumer internet platforms, and manufacturing, low-end to medium-end manufacturing. They've contributed a lot to economic growth, but they've sort of all run their courses, and also have brought about a lot of byproducts that, for instance, monopolistic behavior, real estate bubbles, misallocation of capital. So the last 2-3 years, the government has been making an effort to redirect capital into new areas where new technological innovations need investments. Yeah. For instance, how do we use technology to raise the productivity of our manufacturing sectors?
And so, Eric, is that where you're invested in? So there
Yes.
has been a huge shift, and I know it takes time to see whether this bet pays off. Right. There's also been a crackdown on many industries. Do you feel like you're in a safe place because it's semiconductors, it's also health and biotech?
Yes. Well, reining in the big techs was the sort of what China did in the last 2-3 years. The U.S. has been trying to do it, but I think to much less effectively. If you look at the technology industry in the last 10 years, they've generated tremendous growth. But the level of real technology innovation has been low. Most of them are business model innovations. Okay, the QR code, for instance, that's ubiquitous. That was invented maybe 30 years ago. It's nothing new. So what we need is, our industrial capacity. That's China's major asset. Okay, we generate $5 to $10 trillion US in industrial output. Okay, biggest in the world, bigger than US, Japan, Germany put together. Okay, 30-some% of the world's total. But the value add is still relatively low. And we need to raise maybe 10, 20 percentage points of value add from that industrial output. And that's where the future growth is. And for that, we need real technology innovation. Semiconductor alone may account for 8 points.
And you're confident that technology innovation will come. And again, if you look at a lot of the crackdown, we have the story, Alibaba, we understand Jack Ma's back, could be broken up in 6 to 7 parts. Like, what does it tell you about the big tech versus some of these technological advancements?
That's right. So I think what the government is telling us, telling market forces, is that we don't want you to invest so much capital in real estate, in low-end manufacturing, in consumer platforms anymore. We want you to invest in technologies that matter, technologies that could lift our industrial output, lift the value add of our industrial output. And that's where the venture capitalists are going. We see that on the ground. Obviously, it's not a foregone conclusion whether this will succeed. But I think for the Chinese economy to grow, to get to the next level, it must succeed.
What does it mean for the capital markets or financial markets? How much better does the infrastructure there in terms of equities, but also services need to be?
Yeah. So the Chinese public equity market is still behind the U.S. It needs further development. We have this new starboard in Shanghai that's been developing for the past 2 years. I believe last year the total money raised by IPOs on the starboard was the biggest in the world. It surpassed NASDAQ, surpassed all the other capital markets. So it's a good sign. And if you look at the starboard, most of the companies that are getting listed there are deep tech companies, and that's what China needs. And those are the companies, kind of companies that need access to capital markets.
Eric, if you're a venture capitalist and you can't really list in the U.S. anymore because of tensions and also some of the questions on TikTok, and I'll ask you maybe a little bit about that. Where do you go? Does it mean that you'll grow less or less fast, or do you just need to find new sources of funding?
Well, I mean, we have a lot of capital in the country. I mean, Chinese savings rate is among the highest in the world, and it's a big country. So a huge amount of capital. So it's not a matter of lacking capital. It's a matter of how to channel capital into the right projects. And that's why we need effective capital markets. And obviously, listing in the U.S. has been a model a lot of us have been following. That's sort of been the market norm, but that's less likely now. So for foreign capital, Hong Kong is a good destination for raising capital. But also, like I said, the domestic capital markets are growing.
Given what's happening also with TikTok, and I know you're a great student of political science, how do you describe the working, I guess, capitalist relationship right now between China and the U.S.?
Well, I mean, I think both countries are paying a lot of attention to national security. It's kind of the new keyword for the new phase. And I'm not familiar with the TikTok situation. I'm not familiar what the considerations are for the U.S. government, but I mean, it's a very influential, big company, and it's a Chinese affiliated company. So I see. I mean, that's just the situation. That's the kind of the times.
Yeah. Okay, Eric, thank you so much for joining us. Eric Lee, and I hope to see you in the London studio very soon as well. That was Eric Lee from Shanghai Capital. With that, I'm going to send it back to you in the studio, Tom, and we'll have plenty more interviews throughout the day here from Lake Como.
Yeah, really interesting conversation. Francine Lacroix in Tunelbio. Thank you very much. Right, let's get the Bloomberg First Word News now with Alex Morgan. Alex.
Thank you, Tom. Good morning. The UK is to join an 11-nation Indo-Pacific trading bloc, becoming the first new member since its creation. Rishi Sunak's government hopes membership of the CPTPP, which includes Australia, Japan and Canada, will boost economic growth. The UK's own projections show that joining the group will only grow GDP by around 0.08%. That's partly due to having existing bilateral trade deals with most of the bloc's members. The White House is pressing regulators to tighten rules for mid-sized US banks. It's calling for a reinstatement of liquidity requirements for lenders with assets between $100 and $250 billion, as well as enhanced stress testing. China's economic recovery gathered pace in March, with manufacturing continuing to expand and services and construction picking up strongly. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Alex Morgan, and this is Bloomberg.
All right, Alex Morgan here in London. Thank you very much indeed. Coming up, the latest on the Donald Trump indictment as he becomes the first former US president to face criminal charges. We bring you the story and the details. This is Bloomberg.
Expensive cities have a lot going for them.
But if you live in one, you've probably noticed that these big, expensive cities keep getting more, well, expensive. You could always move away. You might have just started working remotely, so there's really nothing keeping you there. But then again, moving is a hassle. Well, what if someone paid you 10 grand to do it? What if they threw in free office space, a bicycle, or a gym membership? Programs in cities and states around the US are doing exactly that, and they're getting a lot of interest.
We've had over 50,000 applications.
About 90,000 applications.
We've had over 1,800 applicants from all over North America.
So are these nascent programs actually beneficial to their communities and the workers joining them? Or are they little more than flashy advertising campaigns for places looking for an injection of fresh talent?
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Welcome back. Now, Donald Trump could be arraigned as early as Tuesday on charges related to alleged hush money payments to a porn star. Trump will be the first former US president to face criminal charges in a case he calls political persecution. For more, we're joined by Bill Ferries from Bloomberg's National Security and Foreign Policy team. Bill, what do we know at this stage?
Well, we're still waiting for a lot of the details on the charges and what the potential sentences could be if former President Trump is found guilty. We know that his lawyer has said he expects to be arraigned in New York as soon as Tuesday. That would be when the president would face fingerprinting. He would have a mugshot taken, and he would get a chance to respond to the charges in court. After that, he would be released on his own, and the process would likely drag out for months, if not years, bleeding right into the primaries and the lead up to the 2024 presidential campaign.
So given that then, and the linkages to the politics and the lead up to 2024, how significant is this?
It's a big jolt to the entire 2024 campaign. The president has long said he thinks that there's some sort of a deep state of Democrats and opponents lining up against him. This will, in his eyes, provide some of the evidence for that and is likely to be a rallying point for a lot of his supporters. The big question will become how do these sort of more centrist Republicans, some of these people, independent voters who helped elect Trump in 2016 and who turned away from him a bit in 2020, how do they react to this going forward? Do they rally alongside his core supporters, or do they look for some of the alternatives out there, whether it's Florida Governor Ron DeSantis, former Vice President Mike Pence, or another one of the candidates that's likely to be in the field?
Okay, Bill Ferries, on the hugely significant news around the former President Donald Trump, Tuesday is the day when he's likely to have that mugshot taken and those fingerprints as well. We continue to watch this story. Now, a lot going on later today as well. Most importantly, markets are going to keep an eye on, of course, Euro area CPI for March. That's out at 10 a.m. UK time. The French data pointing to softness there for the first time in 3 months. Then at 1:30 p.m., we're going to have some data from the US, including the personal expenditures, PCE, personal consumption expenditures index, important for the Fed, of course. That is it for the European market open. Surveillance early edition is up next. European stocks flat. Stay with us. This is Bloomberg.
CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Information you want, analysis you trust, everything you need to get set for the start of U.S. trading. Watch Bloomberg The Open with Jonathan Ferro. Weekdays on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 1 p.m. Eastern, right here on Bloomberg, your global business authority. This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Good morning and welcome to Bloomberg Surveillance. This is the Early Edition. I'm Danny Berger in London, in for Francine. Here's what's coming up on today's program. French inflation slows for the first time in 3 months, but still comes in marginally hotter than expected. Eurozone CPI hits later this morning ahead of the key print from the U.S. Donald Trump has been charged with allegedly paying hush money to a porn star and will be asked to enter a plea as early as Tuesday, his lawyers say. The 45th president calls the action political persecution. Plus, China's recovery of the economy gathers momentum, with manufacturing, services, and construction topping forecasts in March. It's perhaps a boring end to the month, to the quarter, to the week, and what has been anything but boring. Equity futures in the U.S. able to only just barely notch 0.03% higher. We are on track for a gain of 2.5% for the totality of the month. Shocking when you think everything that's happened, and yet stocks are set to gain. Some weakness coming through for the euro, down 0.2%. I mentioned we had French inflation data. It came in slower, but as inflation really vanquished, still have the hawks out in full force over at the ECB. That perhaps is why we're seeing a German 2-year yield moving higher, about 6 basis points. U.S. 2-year yields, they're moving higher by 3 basis points, but that belies what's happened this month. The 2-year yield, that has fallen 75 basis points through the rest of March. When it comes to equities in Europe, we're still fighting for gains. Most of the map is gray, which means barely a move. One of the sectors, one of the industries and regions that are performing, it is France, it is luxury. It is those companies tied to China, considering we had really strong China data out this morning. Meanwhile, the banking sector is the worst performing today, hence why the FTSE MIB is falling in Italy, of course, high concentration of banks. Now, perhaps part of the reason investors are on the sidelines, it's the month end, but it's also inflation day on both sides of the Atlantic. French inflation has eased for the first time in 3 months, following a slowdown in other Eurozone economies. And now investors are awaiting the Fed's preferred inflation gauge, February PCE data. That will come out later today. Bloomberg Economics reckons Powell's super core indicator, core PCE services, excluding housing, will likely show little disinflation last month. Let's get to our guest this morning. It's Mark Haefele, Chief Investment Officer at UBS Global Wealth Management. Mark, a lot of economic clues we might get today, but at the moment, this is a market that's trying to figure out how much tightening will result from the run on the banks we saw over the past month. How are you thinking about that?
Well, I think, specifically on the banks and monetary policy, what we've seen globally is the governments and the policymakers really trying to split these two things and saying we have, really aggressive policies to deal with any issues in the banking sector. And we have aggressive policies that are separate on the monetary side, i.e. hiking rates, to deal with inflation. And so far they've been kept separate. And as you've said, the equity markets, have taken a very benign view of what's happened this week. Although, of course, in the bond market and maybe in the currency market, it's been a little different.
Does it make sense to you then, or rather not does it make sense because you explain why it's happening, but can stocks continue to defy gravity? Can they continue to climb if we do have such opposing views being played out in other markets?
Well, yeah, I mean, as you say, you wouldn't see the crisis in the equity markets, but you are seeing it elsewhere. So in our view, we think that the risk reward on equities is not necessarily fantastic here, and we would increase our allocation to fixed income. And one of the reasons for that is because what we're seeing is that because of the banking issues that have happened, probably some of the smaller lenders, particularly in the United States, are going to pull back on some of the lending they do. And that's very important to credit creation in the economy. And we haven't seen that come through yet. So we think it'll come through, and it'll start to come through in earnings, particularly in banks, but also in broader measures.
Because at the moment, a lot of the concern we've seen has really, especially when it comes to hiring and cutting costs, it seems to be concentrated in tech. And Mark, the narrative there has been, well, tech just hired a lot, especially the big tech giants. But do you foresee other industries following along from that job cut, really hunkering down on cost type narrative?
Well, this is a fascinating point, and I can tell you our economists are just, up in arms about the quality of the data we're coming through and that's coming through. And, maybe the tech has been very visible because they've been announcing it and it's been being followed. But, I think we got to keep our eye on the ball here. And that is the fact that the Federal Reserve is looking at the employment statistics, it's looking at the inflation numbers, and it's putting those two together. And, although the peak for rates may be pulled forward by some of this, they're still in a mode where they're going to hike rates until they see some of that employment roll over, because historically, you've never really seen the peak of inflation until you start to get unemployment going up.
If the data is bad, and Mark, you're of course not the first person to say this, there's been lots of complaints that the quality of the data has been so hard to interpret. Given that, what do you use as your North Star to invest to try to understand the macro regime that we're in at this moment when, again, the data isn't as useful as it usually is?
Well, I think the fact that the data quality isn't necessarily there, that's one thing, and we'll maybe let some of the economists debate that. What I think we have to focus on the investment side is that for, say, 2 years, almost 3 years, the Federal Reserve said inflation was transitory, and they burned through their credibility on that. And so now they really have to look at this data, even the headline data on inflation and on unemployment, and react to that more. Because if they come in with a story now and start saying, well, the data's bad and we're going to cut rates just because, don't believe the data and we'll just start cutting rates, that they're going to blow through even more of their credibility. And so that's a little bit the dynamic we're caught in, where until you see better in a better inflation picture and better employment picture, regardless how good the data is, it's going to be very hard for the Federal Reserve, and maybe even more in the policymakers in Europe, to really start cutting rates and to lay off on this tightening.
Mark, I'm lucky enough that I almost every morning I get a note in my inbox of your view every morning. You have a fantastic one today on the dollar, and dollar strength has been a defining factor of the past year, 2 years of this market. It's upended a lot of normal trades. It's started new trades. If we are looking at a new regime of a declining dollar, what changes for you? How do you adjust to that new reality?
Well, thank you. And it's a great question because like we were saying, you know, if you just focus on the equity markets and not a lot going on, you know, you're not playing the whole chessboard. And that's what's so exciting for us as investors right now is looking at what's going on in rates and looking at what's going on in currencies. And I think there's, you know, kind of a more short-term and a long-term perspective to take on the dollar. First, you know, we see shorter-term dollar weakness here because we think the Fed is closer to the top of its tightening cycle than, say, what's going on in Europe. And so we would say underweight the dollar. And actually the dollar's fallen, you know, DXY has fallen about 2.6% this month. So look to other currencies. Maybe Swiss franc as a haven, maybe gold as a haven, maybe the Australian dollar as something that can go up on the China rebound.
Okay, Mark, well, we did it. We made it to Friday. We didn't break anything. I'll let you go and enjoy the rest of your day. That's Mark Hafele, Chief Investment Officer at UBS Global Wealth Management. Thanks so much for joining us. Coming up, we're going to be speaking with the Ambrosetti CEO, Valerio De Moli, live from Cannobio in Italy. Interviews next. This is Bloomberg.
What do you like most about your job?
I think the people. I mean, ultimately, we're a people business. A lot of what my job is as CEO of the company is to give those people sort of motivation, to tell them where we're going, to encourage them to come up and do their best work, to encourage them to collaborate. Sometimes you sort of think you're almost a psychologist, you know, as you are a business leader, I think, sometimes.
And so what's your best piece of advice?
I love pitches. I love being sort of leading from the front, if you like, and spending times with teams. I love to see the work that we're doing. When we pitch for a piece of new business, often when we come together. So I guess I try and put myself in the seat of the client. And what's the client going to think when they see this work? Are they going to be excited? Is it going to turn their brand around? How's it going to resonate with their consumers? So as much as possible, I think probably I try and play that role.
Has the Fed coverage you're looking for. Today, an exclusive interview with Boston Fed President Susan Collins.
Restoring price stability does remain our imperative.
For all your Fed coverage, keep it tuned to Bloomberg, your global business authority.
It's going to probably take us a while till we fully understand, are there more losses out there? The other thing is, what's unclear right now is how much of the banking stresses of the past few weeks is leading to a sustained credit crunch, which would then slow down the U.S. economy.
Minneapolis Fed President Neil Kashkari speaking about the impact of the collapse of Silicon Valley Bank, that as investors to prepare to close out a very volatile first quarter, but one that has ended with a rise in stocks. Now, top business executives and policymakers are gathering in northern Italy for the Ambrosetti Forum. High on the agenda are those markets and the banking turmoil that's rocked them in recent weeks. Our very own Francine Lacqua is there at the forum in Cannobio and is joined by a guest. Francine.
Thank you so much, Danny. Yes, I'm about to go into a panel, but first, we're joined by the host, really, of this wonderful conference here in Chernobyl on the riverbanks of Lake Como of Ambrosetti. He's Valerio De Mogli. Thank you so much, Valerio, for joining us. Now, we've had the first panel. I don't know whether there's too much optimism or too much pessimism, but there's a lot of concern, for sure, about the banks. Is the banking system sound, especially in Italy?
Yes, that's a very good question. Actually, the first panel with Nouriel Roubini, Mohamed El Arian, Ellen Zentner, Martin Wolf, Stephen King, and the others was very, very pessimist.
With Mr. Rubini, maybe it's not surprising.
Maybe it's not a news. Yes, exactly. That's regular. As far as the banks are concerned, the Italian banks in particular, they are very sound. Just look at their balance sheets. Just look at the risk reports of the ECB just published a few weeks ago. The stability of the European system is really sound, much better than everywhere else, and particularly than the United States. So that doesn't mean that we need to be fantastically euphoric.
Yeah,
I mean, the situation is serious. We need to be concerned and to do the right things, but it's not dramatic. Think about the 2008 crisis post-Lehman. That was really, really, really catastrophic.
And Valerio, we sat down and you said, look, we're too pessimistic, and you reminded me some of the key points. So 2008, when we felt like it was the end of the world, you also mentioned really the start of COVID, where people were extremely fearful about their future, and maybe also November, when we didn't know whether we had the energy to get through it. But what do you worry about? If you look at what we're living through, interest rates are going high. They've been high, for not long amount of time. They got high very quickly. What will break next?
Yes, well, that's a very possible question to answer. As I said in my introductory remarks here at the European House Ambrosetti Finance Workshop, we are living an era that I define the perma-crisis storm. We have several worrying factors, but at least as far as Italy is concerned, we see many signs of optimism. Just to mention a few, the 2022 export of our manufacturing industry topped the historical high at 625 billion euro. The employment topped the highest figure ever reached, with 500,000 new jobs created in the country, a significant improvement with the previous year. Take few industries, the food, record exports, 60 billion, the fashion, record sales.
But also record inflation, Valerio. So it's
record
not easy.
inflation,
I mean, there's
you're
a
right.
cost of living crisis, right?
Yes.
In a lot of countries that is not easy to live through every day.
That is true. That should worry in perspective. But it is also true that we went double-digit inflation in Europe and in Italy in particular. Now is down, not to normal at all. It's still very high, but it's decreasing. And so I do expect, as the ECB is projecting, then in 2 to 3 years we will go back to the famous 2% ceiling for inflation, which will be a sort of back to normal in a short period of time.
Do you think the ECB will have to crush the economy to get to 2%, or does it gradually adjust?
Well, I think we may have reached the top with interest rates, and there may be a gradual adjustment over time. That's my expectation.
How does Italy, if you look at the reopening of China, I know this is also the focus here, you've invited Eric Lee of Shengwei. How does Italy manage to stay close to the US, close to Europe, with maybe a bit of political questions about some of the measures put in place, but also maybe take advantage of China reopening?
Well, Italy is very much aligned with Europe, apart from a few specific points like migrants or like the automotive industry strategy. Overall, we are 100% aligned with Europe. Take the Ukraine case, 100% aligned. Take the post-COVID recovery plans. So, no, I don't expect that Italy will create any problem to Europe. On the contrary, if you look at the other different governments, you have a very much bad situation in France, in Paris, with storms and protests and strikes. In London, you may not have the same protest, but you have strikes for sure.
I don't know if I can get back to London. I may have to stay here forever.
Well, why not? Well, the weather may improve, but it's not too bad anyhow. Take the example, of the German government, take Israel. So there are many issues around many nations. It's not the case for Italy, for the first time since a decade, we have a stable government.
Valerio, in this very polarized world, so you have China, US, there are proxy wars, all over the place, even within countries. As you say, France is really burning, and you have a division within the countries of two people. Do you worry about an emerging threat that we haven't really thought about yet that could also impact the economies?
It could happen, yes. It could happen because no one of the last perma-crises have been predicted. Yeah. Not the COVID, not the war in Ukraine, not the failure of the SVB in the US, not the Credit Suisse deal, nothing. So it may happen that something very bad will come up, but we need to be optimistic, and we have good elements to be, I think.
Okay, Valerio, grazie.
Thanks
so
to you.
Much
Thanks
for
having me with you.
There. Our host for the day. With that, Danny, I'm going to send it back to you in London, and of course, we'll bring you more interviews throughout the day.
Yeah, no, we'll come back to you in just a moment's time, Francine. Thank you so much for that great conversation, Francine Lacqua in Cernobbio. Coming up, we're going to have the latest on Donald Trump's indictment, becoming the first U.S. president to face criminal charges. This is Bloomberg.
Coming out of World War II into the 1950s, you mentioned that the Fed had imposed yield curve control, basically to finance the wartime deficit. They were trying to move off of that. These are all sort of familiar themes to anyone in 2022, but why was that difficult for them?
Well, so let's get a sense of scale, right? Mm-hmm. So in 1941, there's about $40 billion worth of treasuries outstanding. In 1945, there's about $240 billion worth of treasuries outstanding. So that's about double the pre-war GDP. If you scale that to 2019 and say, okay, COVID expenditures on the scale of World War II, that's about $40 trillion. And the question is, who's going to buy it? Yeah. And
so what we're dealing with is kind of nothing. We got it.
In that context. And so that's where I guess the analogy breaks down. But it's a very difficult problem, which is who's going to buy the equivalent of $40 trillion today in debt?
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Let's get to the Bloomberg First Word News. With that is Leanne Garens. Leanne.
Morning, Danny. Finland has cleared the latest obstacle to joining NATO after Turkey's parliament unanimously voted to approve its membership. It means all 30 members now have ratified Finland's bid to join the defense alliance, which was launched after Russia's invasion of Ukraine. Neighboring Sweden's bid remains opposed by Turkey and Hungary. Now, the UK is to join an 11-nation Indo-Pacific free trade bloc, becoming the first new member since its creation. Rishi Sunak's government hopes membership of the CPTPP, which includes Australia, Japan and Canada, will boost economic growth. The UK's own projections show that joining the group will only grow GDP by 0.08%, partly due to having existing bilateral trade deals with most of the bloc's members already. The White House is pressing regulators to tighten rules for mid-sized US banks. It's calling for the reinstatement of liquidity requirements for lenders with assets between $100 and $250 billion and enhanced stress testing. U.S. Treasury Secretary Janet Yellen says loosening banking rules put in place after the 2008 financial crisis may have contributed to the recent bank failures. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leanne Gerrans, and this is Bloomberg. Danny.
Leanne, thank you so much. Former President Donald Trump is expected to be arraigned as early as Tuesday after being indicted by a Manhattan grand jury. The charge relates to a case against him for directing hush money payments to an adult film star during his 2016 campaign. The Republican is the first former U.S. president to face criminal charges in a case he calls political persecution. Joining us now is Bill Ferries from Bloomberg's National Security and Foreign Policy team. Bill, what more do we know?
Well, we still don't have details of the specific charges former President Trump is expected to face, but his lawyer said he expects Trump to basically surrender himself as soon as Tuesday to the court in New York for the arraignment. That would be the time when former president gets fingerprinted, he gets a mugshot taken, and he gets to enter a plea against the charges he's facing in a court. Then he's likely to just be released on his own recognizance, and the case could drag out for months, possibly years, bleeding right into the 2024 presidential campaign.
Bill, just 30 seconds here, but are Trump's likely opponents for the Republican presidential nomination saying anything?
It's really put some of his likely opponents in a tight spot. You have former Vice President Mike Pence coming out and saying that the charges are an outrage. He's adding his voice to the criticism that this is politically motivated. And Florida Governor Ron DeSantis, another likely opponent, has said his officials would not participate in any extradition if it were required to get President Trump up to New York.
Okay, Bill, thank you very much. Bill Ferries there from our Bloomberg Politics team. Coming up, we're going to be speaking with PIMCO Europe Global Strategist at the Embresetti Forum.
We can replicate Tesla. Tesla is a unique because when they founded and then the personality behind it, the product is beautiful, technologically very, very strong. So in many areas, Tesla is Tesla, but Xpeng is Xpeng. We want to focus on what we think is important for our customers. Our customer like beautifully designed vehicles, either it's large SUV or sports sedan. We believe we have a very, very appealing family look that our customers is really attracted to. They like to have user-friendly features inside the cabin that has a technology feel. It's very smart. It enables them to really utilize the vehicle that's different.
From the world of politics to the world of business, Balance of Power is now live from Bloomberg's Washington headquarters at a new time. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis from and about politics' biggest power players. Balance of Power, now weekdays at 5 p.m. Eastern, only on Bloomberg, your global business authority. This month, Bloomberg brings you the latest from China's 14th Annual National People's Congress, including China's COVID recovery, economic outlook, and geopolitical tensions. Continuing coverage this week on Bloomberg.
French inflation slows for the first time in 3 months, but still comes in marginally hotter than expected. Eurozone CPI hits later this morning ahead of a key print from the U.S. Donald Trump has been charged with allegedly paying hush money to a porn star and will be asked to enter a plea as early as Tuesday, his lawyers say. The 45th president calls the action political persecution. Plus, China's economic recovery gathers momentum with manufacturing, services, and construction topping forecasts in March. Good morning. Happy Friday. Welcome to Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Equities really are hanging tight here to end the month, the week, and the quarter. According to Bank of America, the latest flows show that we had the most cash piles added from investors this week since March 2020. That shows you just how much of a shakeup this market has got. So why make big adjustments here at the month end? Euro, that is looking weaker this morning, down 0.3%. We did get some euro inflation, some euro area-specific country inflation. France, Germany, and Spain were yesterday. Today, we'll also get euro area inflation for the whole region. German two-year yields, those had higher by 5 basis points. For the two-year yield, it's 2 basis points. But of course, they have come in about 75 basis points over the past month as those fears of the banking sector have taken hold. Now, the 34th Ambrosetti Forum is underway today in northern Italy. Top business executives and policymakers are there discussing the outlook for the euro area. Also there discussing that very same thing is Francine Lacqua, who joins us with a guest. Francine.
Danny, thank you so much. I'm delighted to be joined by Jean Frieda from PIMCO. We're about to go on a panel together, and I heard, Jean, that the panel just now was very pessimistic. What's your take on the world economy? Will it crash?
No, I don't think we think it'll crash. We think it's fundamentally in a much healthier place than it has been, into any other cyclical downturn. The efficacy of fiscal policy, through the pandemic and the war, have really left private sector balance sheets in quite good shape. And so from that perspective, we still think that any downturn, even if it's been brought forward by the recent banking stress, is likely to be more shallow than deep.
Is there more banking stress to come?
I mean, that's very, very hard to say. What I would say is that it doesn't seem like, the U.S. has fully gotten a handle on the uncertainty around bank deposits and bank depositors, uninsured deposits. And as a result, I think everyone is on heightened alert. It is important that there is this implicit guarantee on deposits. I think policymakers have made that as clear as possible. Is that sufficient to stop the stress? Probably not. And then we start to get into business model issues with the regional banks as well. And so this is going to be a long-lasting, slow process to work through.
But Jean, if you look at, I guess, the possible credit crunch that's coming, how much does that do the Fed's work? And so what does it mean for treasuries, and where do you want to be invested?
Yeah, so I mean, I think, regional banks account for around 25% of credit to the real economy. 75% comes from the large banks and from the non-banks. Those are still in quite healthy shape. So I think it's probably premature to say that there's a credit crunch, but certainly it's a case where the Fed has lost control of the process. We think it's we think the risks are sufficiently high that you do want to play it quite safe. We think you want to be, given the rise in interest rates, given the rise in bond yields, bonds offer quite attractive returns, and even the safer part of the credit spectrum, investment grade, parts of the investment grade credit universe, we think offer very attractive yield without having to take a ton of risk.
But so in treasuries, where do you want to be invested on the yield
Probably
curve?
in the belly of the curve.
Okay.
I mean, I think the story there is, you can go to cash and earn a nice yield, but you do want some potential for capital appreciation because we do think we're moving toward recession. We do think in that environment, interest rates will come down.
Jane, we also had quite a lot of stress in banking in Europe. What does that mean for countries like Italy? I mean, a lot of the banks are very dependent on, of course, their, Italian BTPs.
Right. Yeah, I mean, I think, Italy, Europe is in pretty healthy shape at the moment. I think it's sort of consistently surprised expectations on the upside. Again, fiscal policy has been remarkably effective in sort of smoothing things over for the private sector. Higher inflation has actually benefited government debt. Government debt is coming down quite steadily. We don't really see the banking stresses being nearly as pervasive in Europe as they have been in the U.S. There have been some uncertainties arising from what happened in Switzerland, but nonetheless, we don't think that's something that materially changes bank funding costs. So from that perspective, we think Europe is in relatively good shape.
I mean, we had some pretty encouraging signs from China. Mm-hmm. At the same time, there's we could look at a real estate that's going to fall off a cliff. Like, what's the China interplay with the rest of the world, and what does that mean for, again, how you played on the markets?
Yeah, I think the coattail effects of this recovery in China will be far less than any other Chinese recovery we've seen. It's very narrowly based. It's consumption-based. There's a lot of focus in China on sort of centralizing control and prioritizing self-sufficiency. That does not speak to a lot of lift for the rest of the world. We do think it'll help Europe at the margin. We think this is probably, the next couple of quarters are sort of peak lift from China. And then you go back to a story where China, has some struggles of its own.
Where are we in 12 months from now? Like, I don't know whether you're expecting actually cuts from the Fed this year, or whether the crunch point is in 12 months where, a lot of the monetary lag policy could come at play.
Yeah, I mean, I think our baseline scenario is one in which, the Fed embarks in some kind of opportunistic disinflation strategy, so they get to where they need to be, or where they feel they need to be, and then they stay there for an extended period of time. That said, we do think the recession risks have gone up and probably been pulled forward. So it's not in our baseline that they cut rates this year, but it's certainly not outside the realms of the possible. When you look at what the money market is pricing, we think it's pricing some kind of average of recession imminently and things being absolutely fine. So, I mean, there's still, quite a bit that can happen in the front end of the curve.
But what does a policy mistake look like from the Fed today?
I think a policy mistake is in overreacting to the financial stress, and then in hindsight, finding that there wasn't actually that much stress there in the first place. Again, I don't envy them the task. It's not an easy job, but ultimately, we've got a two-front war between inflation and financial instability, and the Fed needs to keep its eye on the inflation prize.
But how difficult is it to entangle those two?
Extremely.
And so, I mean, does extra regulation on banks helps, or is it extra supervision of the rules that are already in place?
Extra regulation is something for the future. I mean, it may happen now, but it's something that impacts the banks over a longer period of time. I think the immediate prerogative is to try to use macroprudential policy and at some level potentially the balance sheet to stabilize the situation, the uncertainty on the deposit side, so that the Fed can focus on this inflation battle.
Talk to me about the UK a little bit. So it certainly wasn't dull in the fixed income space over the last 12 months. Is it now more stable?
I think it's much more stable now, but I would say that the LDI crisis was kind of it revealed the canary in the coal mine of bonds not serving their traditional role in portfolios as a safe asset. This is similar to what happened with SVB, and we may see more instances of it. But as far as the UK goes, I think the challenge there is really they're kind of like the average of Europe and the US. They have a labor market that is structurally very tight. I think in the best case, the Bank of England will be able to stop relatively soon, but it's going to have to keep rates high for quite some time, given the underlying inflation pressures there.
Are you buying gilts?
Are we buying gilts? Well, you know, we don't comment directly on what we're doing in our portfolios.
But it's not, I mean, is it a bad play? Is it a good play? Like, at the moment, does it look attractive?
I would say it's probably not one of our favorite markets. I think we do find more attraction in the U.S. because we do see the disinflation process is much more advanced and convincing, whereas in the UK we're looking at something closer to stagflation risk.
Okay, Jean, as always, thank you so much for joining us. Jean Frieda there from PIMCO. Danny, with that, I'm going to send it back to you in London, and of course we'll have plenty more from Ambrosetti throughout the day.
Francine, thank you very much. Again, Francine Lacqua there with the PIMCO Executive VP and Global Strategist. Now, stay with Bloomberg Television throughout the day. We're going to bring you more conversations, as Francine said, from the Ambrosetti Forum. She's going to be sitting down with Nouriel Roubini in Chernobyl. That interview is coming up in less than an hour here on Bloomberg Surveillance. But first, coming up on this program, the UK is going to join an 11-nation Indo-Pacific trade bloc. We'll bring you what membership will mean for the UK economy next. This is Bloomberg.
Was the brainchild of Apollo CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
Our studios in New York and San Francisco, our new hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech at a new time, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television.
With the UK joining, we're going to be the second biggest economy within the CPTPP group, and it turns it from a Pacific agreement into a global agreement of countries that are hugely motivated to retain and advance free, open and fair trade.
British High Commissioner to Singapore, Cara Owen there. The UK is set to join an 11-nation Indo-Pacific free trade bloc, becoming the first new member since its creation. Rishi Sunak's government sees membership of the CPTPP, which includes Austria, Japan, and Canada, as a boost for economic growth. The UK's own projections show that joining the group will only grow GDP by 0.08%. So not too much there. Joining us now is Bloomberg's UK politics reporter Ellen Milligan. Ellen, membership of this group, I mean, it's only contributing to less than 0.1%. So what does the government hope to get from this?
And by the way, that 0.08% is actually will come in annually after 10 years of being a member. So it's not even an immediate economic benefit. And when you put that into the context of the 4% economic hit projected from leaving the European Union, it does look pretty measly. But it's not comparable to being a member of the EU. This bloc doesn't have its own laws. It doesn't have a court or parliament. It's essentially a multi-country trade agreement rather than something comparable to a bloc like the European Union. So what the UK says is that this is not a deal for today, this is a deal for tomorrow. More countries are going to join. They point to Thailand and South Korea. The Indo-Pacific region is going to be the big growth economy over the coming decades. And they also see this as important for the UK's soft power in the Indo-Pacific. They've, in recent years, wanted to tilt from Europe to the Indo-Pacific. You've seen Rishi Sunak do defence deals recently with Japan and Australia, two of the most prominent countries in this trading bloc. And the UK will be able to have a say over trading rules going forward for the region, and also, quite crucially, will be able to veto any new members. Now, who put a application in to join the CPTPP 2 years ago? China, and that's really interesting because the UK is very conscious of now having a role in the say over whether they get membership.
Ellen, you say CPTPP like it's easy and it rolls off the tongue. I struggle with that acronym. Look, while we're talking about UK growth, we also had fourth quarter GDP data this morning. What were some of your key takeaways from that?
Well, yeah, the UK economy grew by 0.1% in the last quarter, narrowly avoiding a recession. It's quite hard to celebrate this as an economic win, considering they only just dodged a recession last year. There was a number of really interesting economic data out today. House prices fell at the sharpest annual rate since 2009, since the aftermath of the 2008 crash. That's obviously linked to high interest rates, people being reluctant to take out expensive mortgages to buy new homes. But on the flip side of this, actually something that I think is really interesting that hasn't had loads of pickup today, which is that the UK's national living wage, which is the hourly wage set for workers who work per hour, like in shops or part-time, will rise from tomorrow by 9.7%. That's really interesting because it almost matches inflation, hovering at about 10%. But when you compare it to the annual wages of public sector workers, which are going up by about 4%, and of course there's lots of industrial action and strikes that have been taking place because of that. It's really interesting context, especially as the Low Pay Commission, who advises the government on this, says that this won't be inflationary.
Right. Ellen, thank you very much. That's Bloomberg's Ellen Milligan. Thanks so much for joining us. And we're going to be covering all things UK every week on Thursdays. It'll be at 9:30 a.m. London time in our half-hour special. Well, from the UK to China, where the economy kept up its momentum in March with the non-manufacturing PMI soaring past expectations to an almost 12-year high. Joining us now is Bloomberg's Tom McKenzie. Tom, I thought we knew China was recovering well, so why are these reports so much better than what was expected by economists?
Well, I think there was an expectation that China was going to recover well as it reopened, and that surprise reopening, of course, towards the end of last year. But there was all sorts of questions about to what extent COVID and the spread there was going to derail things in terms of manufacturing, in terms of keeping people at home. But what we're seeing is that in terms of that demand around consumption and travel and buying in shops and restaurants, that has ticked up pretty strongly. So across the non-manufacturing PMI, so construction and services, as you say, the print came in at 58.1. So levels that we last saw, that's the highest print since May of 2011. Manufacturing PMI as well for the month of March also came in higher than forecast, 52. So comfortably above that line in terms of expansion, 50 and above. What is happening is local governments are spending more. They're giving incentives for people to get out and spend. And that is having an impact. And importantly, it's domestic consumption that is the play. And that's what the government wanted to see. They've wanted to see people go out and consume. And so far, that is holding up. We've heard from the new premier of China, Li Qiang, speaking to foreign executives in China this week and appealing to them, saying you can invest, you can have faith that the economy is rebounding here. A couple of points to note. Unemployment remains a challenge, particularly for those under the age of 25. So continue to watch that, because if that becomes and continues to be a problem, then consumption could start to ebb off again. And manufacturing as well. Sentiment there is pretty weak. Exports remain pretty weak. And of course, if we get into a recessionary environment, then many predict out of the US and Europe, of course, major trading partners for China, then that could prove a further drag on exports. So those potential weak spots, but at the top line, in terms of the domestic consumption, that is rebounding very strongly. And it gets them onto that track for 5.3%, which is what most economists think they're going to get in terms of the economic growth.
Well, I've got to imagine that appeal to say, hey, invest in China.
Yeah.
Part of the story also must be that our environment for tech is okay. There's been a lot of attention around the reopening of China's tech IPO market. What has that meant for sentiment?
Yeah, so to your point, the Premier's words at the Boao Forum in Hainan, backed by the economic data, now backed by some policy changes. And you're absolutely right. Look, we were whiplashed by the changes around the regulations confronting the tech sector in the last 2 years. And now, just in the space of a week, some really major advancements in terms of easing back. You've had Jack Ma, arguably the most high-profile Chinese business executive, back in China. We've had Alibaba, of course, the major e-commerce giant, announcing it's splitting into 6 parts. And then today, reporting from Bloomberg, they are now approaching IPOs for the logistics business. That's worth about $20 billion. It's called Cainiao. And then JD.com, one of their big competitors, is also looking at an IPO. So they're looking to extract value. And clearly, they would not be doing this, these companies, if they didn't have the blessing of the Communist Party and the government.
Yeah, certainly not. Maybe serves as a blueprint for all other large China tech. Tom, thank you so much. It's Bloomberg's Tom McKenzie. Now let's get to your Bloomberg Business Flash. With that is Leanne Gerrans. Good morning, Leanne.
Morning, Danny. Netflix is restructuring its film group to make fewer movies and centralize decision-making. The US streaming giant says it will combine units that produce small and mid-sized pictures, resulting in a handful of layoffs. Netflix has released more original movies than any other company in Hollywood recently, producing upwards of 50 projects a year. Now, Tesla is said to be looking to build a battery plant in the US with China's CATL. Sources say Tesla discussed plans with the world's largest EV battery maker and the White House in recent days. We're told Musk's company wants a similar deal to the one agreed by Ford and CATL, who are building a factory in Michigan, wholly owned by the US car maker. Now, China's biggest state-owned banks have delivered full-year profit gains after boosting lending to help cushion the economy from strict COVID-0 policies. The lenders mostly top or did meet forecasts, with AG Bank leading profit growth at 7.4% on year. ICBC was the only major whose net income did fall short of estimates. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leanne Gerrans, and this is Bloomberg. Danny.
Leanne, thank you very much. Coming up, the White House wants to reinstate some of the banking regulations that were revoked by the Trump administration. I have those details for you next on Bloomberg.
What do you like most about your job?
I think the people. I mean, ultimately, we're a people business. A lot of what my job is as CEO of the company is to give those people sort of motivation, to tell them where we're going, to encourage them to come up and do their best work, to encourage them to collaborate. Sometimes you sort of think you're almost a psychologist, as you are a business leader, I think, sometimes.
And so what's your best piece of advice?
I love pitches. I love being sort of leading from the front, if you like, and spending times with teams. I love to see the work that we're doing. When we pitch for a piece of new business, often when we come together. So I guess I try and put myself in the seat of the client. Now, what's the client going to think when they see this work? Are they going to be excited? Is it going to turn their brand around? How's it going to resonate with their consumers? So as much as possible, I think probably I try and play that role.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
Remind us of the urgent need to complete unfinished business, to finalize post-crisis reforms, consider whether deregulation may have gone too far, and repair the cracks in the regulatory perimeter that the recent shocks have revealed.
U.S. Treasury Secretary Janet Yellen speaking at the annual National Association for Business Economics Conference in Washington. The White House, at the same time, is pressing regulators to tighten rules for U.S. mid-sized banks. The package calls to bring back liquidity rules and annual stress tests for banks with assets between $100 and $250 billion. It is the strongest step yet in response to the banking crisis for the Biden administration. For more, let's bring in Bloomberg's managing editor for finance, Michael Moore. Mike, how much teeth does this actually have? Is this something the White House is going to be able to get done?
I think it's the easiest thing to get done because these processes already exist. You know, just these banks had been exempted from them. So they've already got the stress tests, they've already got the liquidity rules. They've just been for the bigger banks. And so expanding them to a wider group of banks and making those banks adjust quicker to them would probably be the easiest because you don't have to create new rules.
But how much effect would it have in preventing further crises? Does it go far enough, I suppose?
I think, you know, this was a liquidity issue for a lot of these banks. And if you required them to model some of those liquidity outflows, I think it would expose some of these problems earlier on. I mean, we did have in testimony this week, you know, the Fed saying they had identified some of these issues already and were working with the bank. But if it's out there in a public stress test, it probably gets a lot more attention and the bank has to address it quicker.
Yeah, well, we also had data overnight for us late in the U.S. that banks had borrowed less from the Fed this past week.
Yep.
Is this the bank stress easing?
It's easing a bit, but those are still quite elevated numbers. And you've seen a shift from the typical discount window into this new program that has a little more term to it. So, you know, if banks are able to lock in a little bit longer term loans from the Fed, perhaps gives them a little more comfort not to have to tap it as often. So I think you're seeing a bit of easing, but not back to normal yet.
Right. All right. At least it's better. At this point, that's the most we can ask for. Michael, thank you so much. That's Bloomberg's Michael Moore. Now, don't forget, we're also going to be getting U.S. PCE data later. That's the Fed's favorite gauge of inflation. Markets at a standstill until then. This is Bloomberg.
The standard way venture firms work is you commit capital, let's say over a 5-year investment period, something like that.
Yeah, exactly. Right.
And then the fund is typically lasts maybe 10 years or so.
15. Well, these days longer. So often 15. Often the tail extends out to 20 years because these companies take a long time to develop.
And somebody that invests in a venture fund today should be trying to get rates of return of 20%, would you say, or more?
You know, top-end venture is sort of 3x net of fees. You know, ideally you're hoping for more than that. You're hoping for 5x or more. You know, you're illiquid the entire time, right? So you'd hope to get paid for the liquidity.
And today,
so yeah, maybe 20 to 40% if things go well is sort of baseline.
Let's take another subject. Let's suppose somebody says, I don't want to invest in Andreessen Horowitz. I want to be Mark Andreessen. How does somebody become a venture capitalist? What are the skill sets for good venture capitalists? There's a high degree of intelligence, hard work, a lot of luck, dress the right part, don't wear a tie. What are the things that make one a good venture capitalist?
So the highly successful VCs historically are very idiosyncratic. You have people from very different backgrounds. Mike Morris is a former newspaper reporter. John Doerr is a former chip salesman. You've got people with very different. Jim Breyer has more of this kind of blue chip investment background. You have people with very different backgrounds and experiences. And so I think it's some set of skills and some set of knowledge, and then there seems to be a taste component to it that's really hard to measure and really hard to predict.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Could face bigger challenges next.
It was going to keep rate World Cup. This is a 3.
As the economic picture does. The OK is getting ready to make a decision.
This is Bloomberg.
The banking concerns might be behind us because regulators have been extremely fast and extremely determined in addressing them.
The good news is the flashing red is behind us, but we're now in the flashing yellow phase.
The main issue remains unaddressed, which is there's going to be a growth price to pay for the fact that you've raised interest rates by almost 500 basis points over the past year.
The actual impact of rate hikes really trickling through into the real economy and accidents happening as a consequence of that, those are concerning.
It takes a time for this tightening of credit conditions to feed through into weaker growth. Once it does, the equity market will react.
This is Bloomberg Surveillance, early edition, with Anna Edwards and Matt Miller.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. For the first time ever, a former U.S. president faces criminal charges. A grand jury indicts Donald Trump in a case that could reshape the political landscape. The economist known as Dr. Doom talks about mega threats and how to survive them. We will hear from Muriel Rubini. And we'll look at the euro area inflation data that's just hitting the Bloomberg now and preview a key U.S. inflation gauge. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller in New York. And Matt, clearly the focus of the news cycle very much on U.S. politics. In the meantime, the markets perhaps take a breather after what we've seen.
Yeah, well, I mean, the political story was an absolute bombshell dropping last night and confirmed by the prosecutor here in New York. We'll talk about the Trump indictment throughout the program and throughout the day, if not throughout, the rest of the year, because this has real implications for the 2024 election. In terms of the markets, we have had a pretty good month and a pretty good quarter. S&P futures are still up, but only, as you can see, 0.04%. You do have investors letting go of 10-year bonds, the yield floating up to 356. This is about where it was actually yesterday when we looked at it. But if you see the charts, you'll see the 10-year yield coming up. You'll see the Bloomberg Dollar Index coming up. You don't see that for crude, and you don't see that for Bitcoin. NYMEX down to 73.87, so back under $74, and Bitcoin back under 28,000 at 27. 822. We did see a lift out of Asia. If you take a look at Asian markets, you'll see that we had gains overnight. The MSCI Asia Pacific up another 0.5%, with the Hang Seng gaining the same, and the Nikkei up 1%. The dollar gaining some strength. Really, you saw it against Bitcoin. You'll see it against other currencies, but against the yen as well at 133.43. So a little bit of a lift there, although the Bloomberg Dollar Index still holding at, I think, about 1229. Take a look at though, the dollar strength today. If we see it really start to pick up, that could be a headwind for stocks. If you see rates continue to rise, that could be a headwind for stocks as well. Anna, what do you see in Europe?
Yeah, let's get straight to some breaking news coming through on the Eurozone and on the inflation beat then. Euro area March consumer prices rising by 6.9%, Matt. That's the year-on-year figure. It's a big step down from the previous month, and it's lower than the estimates. So on both of those fronts, inflation at the headline level at least moving perhaps in the right direction for policymakers and for everybody who wants to see the back of some of the higher readings of inflation. There are still questions around core inflation, although I note that in this set of data, core has come in line with estimates. So we'll continue those conversations about where the Eurozone inflation story goes and indeed where we go stateside. Later on, we get PCE. We had the map up for a moment. It showed a mixed picture for Europe, and that's what we've got, mixed picture for stocks. Here's euro dollar, 108.78. We see a bit of weakness in the euro this morning, a bit of strength in the dollar. Maybe that's more in the driving seat, though. Dollar strength around risk-taking rather than a recovery from the financial crisis, from the sort of financial turmoil we've seen over recent weeks, rather than being driven by the Eurozone data. Here's the pound, also on the back foot then, 123.64. Again, probably being driven by the dollar this morning. But we have had some interesting data out on the UK. GDP revised up just at the margins, but still confirmation that we avoided that recession for now that a lot of people are talking about. But negative news flow surrounding the housing market in the UK, and that has an influence on the psyche and the economy. Air France KLM, one of the aviation stocks in focus, Matt, moving higher. We've seen upgrades to various names in the sector from the likes of Barclays and Deutsche Bank. So that's having an impact on those that operate in the aviation space. And the banking sector, just keeping an eye on that as it is Friday. And this time last week, we were focused on a big sell-off across European stocks and the banking sector as nobody wanted to hang on to that risk as we went into the weekend. Today looks a little bit different, just some gradual moves lower, but it is the worst performing sector here in Europe, Matt.
All right, well, we'll continue to watch that, and there's a lot of movers related to it. Right now, though, I want to get back to the big political story. For the first time in U.S. history, a former president has been indicted. Donald Trump's lawyer says he is expected to be arraigned on charges as early as Tuesday. A grand jury in Manhattan decided there was enough evidence to proceed with a case against him for directing hush money payments to a porn star during his 2016 campaign. Former Vice President Mike Pence spoke about this with CNN after the announcement.
I think this is an outrage, but I also think at a time when the American people are struggling so much that this will only further serve to divide our country. The message that this sends to the wider world is a terrible message about the American justice system. And I would that this Manhattan DA would have thought better of it and put the interest of the nation first.
Emily Wilkins, Bloomberg government reporter, and Bill Ferries, our former U.S. national security team leader in Washington, join us for more. And Emily, let me start with you. Is this a lose-lose situation? Is there anything positive that comes from this?
Well, if you're Donald Trump and you are keeping an eye on getting that Republican presidential nomination from the Republican Party, this could actually be a good thing for you. We have seen in polling again and again that Republican voters, they just don't think that these charges are serious, that they think they're politically motivated. You've seen Trump go ahead and fundraise off of this. And you've also seen others who are running against him for president come out and actually support him and really sort of say, you know, that these charges should not be there. And I think to a certain extent that does help him a little bit politically. The question, of course, is exactly how much, because if you just stop looking at the Republican voters and you take the wider swath of voters, the Democrats and the independents, you see much smaller percentages of everyone thinking that this is politically motivated. So if he does wind up being the Republican nominee, this could hurt him in the general. I think we still have a lot of questions, though. We have yet to see exactly what the charges are. We don't really know at this point the details of exactly how Trump might go ahead and surrender. And of course, remember, we have other pending investigations, both in Georgia and here in D.C., and that could absolutely play a role into what happens.
All right, so maybe good for Trump, but how bad is this for the United States of America, Bill? I mean, the president himself, the former president himself, has forecast death and destruction if he was indicted. And we are already worried about security threats here in New York City.
Right. It's certainly going to add fuel to a very polarized and tense climate in the U.S. politically. We know the court in New York, where the president is expected to be arraigned as soon as Tuesday, has already been beefing up security. That's going to continue until the president appears there. Listen, the United States has never seen a former president with a mugshot getting fingerprinted and having to stand in a court to answer to charges against him. That's all likely to happen as soon as Tuesday next week. As Emily said, I think at many levels this will help rally the president's base, his core supporters. The big question is going to be some of those more centrist Republicans, some of those independent voters. Do they agree with the former president that this is a bit of a witch hunt, a political use of the legal system, or do they see this as too much drama, a bit of coming back from a period that they thought the U.S. was moving beyond?
Emily, do we get any clues yet? And we heard a little bit from Mike Pence there, but do we get any clues yet as to how the Republican Party is going to fall on this particular subject, whether they're supporters of Trump or not, how they view this, how much distance they want to put themselves between themselves and him, or how close they want to be to this?
Well, for weeks now, you've been able to see Republicans really begin to formulate their responses to this indictment. We knew that this was coming. And what you've really heard, particularly from Republicans on Capitol Hill, is that entire thing is politicized, that they are simply going after Trump to go after Trump, and that this is absolutely outrageous. That was actually the one-word statement from Judiciary Chairman Jordan, who leads the Weaponization Committee, looking into the potential weaponization of government. So Republicans have really kind of made the fine point here that you ask them about this and they will immediately pivot to Manhattan DA Alan Bragg. They will immediately begin talking about the politicization of this. To a certain extent, Republicans know that Trump has not done well in previous elections, in key swing states in 2022, and of course with the presidential in 2020. And I think to a certain extent, there is a kind of narrow line that they want to walk, where they don't want to talk so much about Trump as so much about the larger situation and whether or not Alvin Bragg and Democrats are doing the right thing here.
Yes, Bill, this isn't the only legal challenge that the former president could face. What are the other challenges he faces?
Right. Regardless of how this plays out, he's got a slew of other legal challenges coming ahead. You have a case in Georgia where the prosecutor or the district attorney has to decide whether to press charges accusing Trump of meddling in the publication of results from the 2020 election. He faces a lawsuit in New York State. He and his children face a lawsuit over whether they manipulated the values of some of their properties. That could actually be financially the most damaging case for the president if it goes forward. Listen, there are probes into Trump's possible incitement of the January 6 protesters. There's an investigation of his handling of classified material found at Mar-a-Lago. So really, however this plays out, there could be other indictments or legal setbacks coming ahead for the president. All of that will bleed well into the Republican primaries and the 2024 presidential race.
How have we heard, Emily, the Biden administration responding to this, if at all? Does Biden want to get involved? Is there any way they can bring attention away from this? Have they maybe called Alvin Bragg and said, "What the heck are you doing?"
I think to a certain extent, the Biden administration has tried to keep out of it. I'm sure, of course, as today goes on, we will be hearing some more from the Biden administration. But to a certain extent, they have really tried to separate themselves from this process, saying, hey, that's the judiciary. We're going to let that process play out. Remember, as much as we are talking about Alvin Bragg, this was a grand jury that wound up deciding on this indictment. So it wasn't simply one individual acting alone. And to a certain extent, Biden's tried to be very, very careful about not getting too involved, not putting his finger on the scale, not trying to tip anything one way or the other at this point.
Okay, Emily, thanks very much. Thanks for joining us, Emily Wilkins, and also Bill Farries, with lots of analysis of what's going on right now. We'll have more on Trump's indictment later this hour. We'll speak with Peter Trubowitz, International Relations Professor at the LSE. Also coming up, we will talk to Zeynep Ozturk-Unlu, Deutsche Bank's private bank EMEA CIO. We've had that inflation data out from Europe. What does she make of the sustainability of those moves lower? And renowned economist Muriel Rubini joins us here. Joins us live from the Ambrosetti Forum in Cernobbio by the side of Lake Como in Italy, where we've been hearing from an array of experts on the global economy and markets. Earlier, Bloomberg Opinion's Mohamed El-Erian discussed the recent turmoil in the banking sector.
This is not 2008. 2008 was a sudden stop, where things just stopped because the payments and settlement system was in play. This is very different. This will play out probably in the third and fourth quarter, and it will have a long tail. So it is very, very different from what we've experienced before.
As governments, we have a responsibility to create the incentives and the space for you to flourish, a receptive environment for change, and the accountability that comes with guardianship. In many nations, the foundation for this approach has been laid for us long ago if we choose to listen. Where I come from, Aotearoa, New Zealand, a beautiful place you must visit, our Indigenous people hold a worldview that every single living and non-living thing is connected. Our people, our plants, our animals, descendants of Ranganui, the Sky Father, and Papatuanuku, the Earth Mother, and their children. And so it follows that people and nature are kin, are family. And we must care for one another in the spirit of kaitiakitanga, which translates into guardianship by the people of the land for the next generation.
Bloomberg has the Fed coverage you're looking for. Monday, an exclusive interview with St. Louis Fed President Jim Bullard.
The benefits of getting inflation under control quickly are vast.
For all your Fed coverage, keep it tuned to Bloomberg.
Welcome back to Bloomberg Surveillance Early Edition. Now, we started the program with some data out from the Eurozone showing what we'd expected, a drop down in the inflation narrative in the Eurozone, a real step down. We saw that in Spain yesterday, we saw it in Germany yesterday, and now we're seeing it at the Eurozone level as well. So that moving in the right direction as far as policymakers are concerned. A slight tick up, though, in the core CPI reading year on year. Let's work out what this means for investment strategy, for central banking, and we'll speak to Zeynep Ozturk-Unlu, who's Deutsche Bank Private Bank's EMEA CIO. Very nice to have you with us, Zeynep. Let's start with this inflation story then, because on the one hand, we can all cheer a 3% inflation handle in Spain and look at this big drop down and say, well, that's a bit of a relief, really, for lots of European economies. But the core numbers do look sticky. Does this add to your thinking about how long inflation stays elevated?
To be fair, it's quite in line with what we were expecting. We were expecting the core to come down much slowly than the headline, and especially with the core data that come from food, transport and shelter, one of the core items that impacts everyone's day-to-day life, and where the central banks have been focusing on. This is a worry broadly that you want to see that coming down much quicker, but this is how the data feeds in. This is how you see the actual impact of the rate hike. So it takes time, and it's not unexpected in a way.
And a lot of people have been talking in recent weeks about just how much the ECB might continue to hike, and maybe the Fed a little bit less so with the financial turmoil that we've seen, and that could lead to euro strength. But there's quite a lot of crowded voices maybe giving that call. Are you concerned that that's kind of crowded, or do you share those views?
I don't think it is. It is crowded to a certain extent, but I don't think it is wrong, because ECB was very adamant in the way that they were messaging their fight with inflation. Of course, some of the turmoil that we've experienced last couple of weeks have created the question mark whether they will continue or they will be a bit more slow. But now this gives ECBs a strong hand in terms of confirming that their actions have been right, and they need to focus on their rate hike, but it can help them to be a little bit more slower or a bit less hawkish. So in a way, this is a good sign.
Does the ECB have to worry about financial stability as much as the Fed does?
I don't think so, mainly because of the fact that the European banking system have been significantly more regulated. And if you look into different parts of Eurozone, you have seen the main whirlwind effects have been quite strong in terms of the sell-off in bank stocks. But when you look at the fundamentals, they are much strong, and the system has been significantly more regulated. That's why, even though ECB gave a very positive support to the system, they are not as worried or are not as concerned like the situation that we see in US.
So here the problem has been obviously rising rates means the value of Treasury holdings is lower than a lot of people would have expected a year ago. Plus, we're starting to worry about commercial real estate. Are those two issues not at play for European banks, for the European economy?
If I start with the first one, the rising rates is an issue broadly for the industry in general, but it has also has its positive impact in the positive margins that you get from a higher interest rates within the banking sector. And this was one of the positive calls that a lot of the industry experts were giving on banks' performance. But when it comes into move away from the deposit size or the deposit run, as we call it, happens, this creates this mismatch. However, in Europe, we haven't seen anything in that scale that has been the case in US. Plus, the way that the deposit percentages and the collateral of the long-term treasuries is significantly less in Europe. So it's a much better place for the European banks. When it comes into the commercial real estate, of course, it's a major worry across the board, regardless Europe and US. It's more around how banks have been working around their loan to values, or how they have been taking the risk. What are the measures that they had becomes more critical. So it's not just region to region, but it's literally bank to bank that one needs to look through.
Okay, so that's the focus there. In terms of the broad stock market picture, global stocks actually have had a pretty good time of it in the last, when you disregard the turmoil around the banking sector. But if you look at how it's performed over the last quarter, we've seen the second straight quarterly gain actually for global stocks. Tech stocks clearly to the fore, rallying an incredible amount even before we see a pause, even if we have seen a step down from the Fed. Do you buy into further momentum behind tech?
Not really.
You prefer elsewhere?
Yes, we are very balanced, and I think this was the name of the game for us since the beginning of the year, to be quite balanced and diversified across. Our main view was to go with more value rather than growth, but now what we have seen is growth is overtaking value because of the concerns. But when you look into the sell-off that we've experienced over the last couple of weeks, the impact is not as much in the broader index than, for example, what we experienced in the tech sell-off back in last year, because of the percentage of, for example, financial sector within the broader index is significantly lesser. Therefore, we still think that our call on more resilient market holds. We're not increasing or decreasing, in a way, our exposure. So I think this is going to be a more or less very diversified regionally and sectoral view in our equity exposure.
So Zeynep, we covered the banks. We've covered tech. Anna and I have been talking a lot about retail lately, with a lot of retailers working off inventory. How is your view of the consumer in Europe, and what industry groups do you like?
This is one of the most tricky question, I have to say, for today, because the consumer sentiment in Europe is still not great. But when we look into the luxury in particular, that part gets the best return and performance, and what we connect it with is mostly the reopening of China and the flow that we see coming into with an increased tourism, not only from China but broadly from the Asia into Europe, and the way that we see some of the undervaluation of the property in UK, for example, that you start to see US investors and the Chinese investors coming in and seeing whether this is something that they can take advantage to. But overall, the local consumer sentiment is still relatively negative because of the increased prices are impacting everyone's day-to-day life, and increased rates are impacting the mortgage cost. So what you really see is the higher end of the consumer products. Luxury goods are the ones that are performing quite well.
We continue to see that bifurcation, that wealth inequality. Zeynep, thank you so much for joining us. Zeynep Ozturk Unlu of Deutsche Private Bank, talking to us about the economy and really the markets here. Let's keep you up to date with the first word, with the news from around the world. Here's your first word news. In China, the economic recovery that Zeynep mentioned picked up steam in March. Gauges for manufacturing, services, and construction activity remain strong. That boosted the outlook for growth this year. The Purchasing Managers Index for the non-manufacturing sector reached its highest level since May of 2011. The White House is taking its strongest step yet in response to the banking crisis. It's pressing regulators to tighten the rules for mid-sized banks following the collapse of two regional lenders. The White House says that deregulation of the banking industry went too far, although I spoke with Barney Frank, the co-author of the Dodd-Frank bill, and he said he didn't think that was the case. Finland has cleared the final obstacle to joining NATO. Lawmakers in Turkey unanimously voted Thursday to ratify Finland's entry into the military alliance. The vote seals a major change in the European security architecture. Finland and Sweden sought NATO membership following Russia's invasion of Ukraine. Turkey and Hungary still oppose Sweden's entry. The UK is joining an Indo-Pacific trade bloc in a major post-Brexit agreement. The 11-nation Comprehensive and Progressive Agreement for Trans-Pacific Partnership includes Australia, Japan, and Canada. Prime Minister Rishi Sunak's government sees growth of $2.2 billion each year over the long term, and that could grow if others join the bloc. Bloomberg has learned that Tesla is looking to build a battery plant right here in the U.S. of A., and it would likely be a controversial arrangement with China's dominant electric vehicle manufacturer. In recent days, Tesla discussed plans involving the company CATL with White House officials. So Tesla remains, I guess, in the news with that, and global car makers continue to make that push towards EVs. I don't know if you saw, Anna, but Lamborghini announced the successor to the Aventador yesterday. It's a hybrid, a V12 engine, but also with battery-powered electric motors that generates over 1,000 horsepower. And I'm very much looking forward to seeing it next week when they bring it to New York for the auto show.
I'll add one to my shopping list. I'll focus very much on the politics, of course, Matt, but meanwhile, markets actually recovering a little bit. European stocks ticking up a little, the Chinese data reassuring, and perhaps because we don't have any banks collapsing, not loudly anyway, right now, this Friday morning. And that's adding to some optimism.
Yeah, absolutely. We're going to talk about that as well with someone who's not optimistic at all.
Yes.
Coming up live from the Ambrosetti Forum in Cernobbio, Italy, Nouriel Rubini, Rubini Macro Associate CEO, also known as Dr. Doom. This is Bloomberg.
Chris, can I ask my landlord for a rent cut in the next couple months? Like, is that reasonable?
Well, I guess it depends when you signed your lease, Joe. It sounds like you got kind of one of those pandemic deals that, particularly in New York City, where rents actually fell really sharply in that first year of the pandemic. So we are really seeing the market having turned a corner a little bit over these past few months. Prices have been coming down for 4 straight months now in our national rent index. But, if you're still paying that late 2020 level, then you might not necessarily be eligible for a discount at this point.
Good point. All right, I have another question, which is like, so I have 2 kids, but unlike other people, I actually am cool and I don't want to move to the suburbs. Like,
this episode is just Joe taking like advice on handling his rent.
I just want to point out, I really like my landlord.
You love your landlord?
She's very attentive. We have a very good relationship. So even though I started the episode saying I was anxious, if she is listening to this, I hope she hears that I really enjoy where we live and I really enjoy our the landlord.
She should factor your consistency into her pricing algorithm.
We've never been. Yes, exactly.
Excellent.
DOJ or other authorities
could face bigger challenges.
Was going to keep rate World Cup. This is a 3.
As the economic picture does. Is it the OK's getting ready to make?
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. For the first time ever, a former U.S. president faces criminal charges. A grand jury indicts Donald Trump in a case that could reshape the political landscape. The economist known as Dr. Doom talks about mega threats and how to survive them. We will hear from Muriel Rubini. And euro area inflation plunges by the most on record, but underlying price gains hit a new high. We'll get a key read on U.S. inflation later today. I'm Anna Edwards in London with Matt Miller in New York, and I suppose it's the inflation dynamic that we've seen in Europe here that will feature on the U.S. market radar later today, even if all of the headlines and the news cycle is dominated by politics then, Matt.
Yeah, I mean, we're absolutely focused on what looks like an historic case, the first time ever that a former president faces criminal charges. He'll be arraigned and fingerprinted. Normal procedure would be handcuffs, but I'm sure they'll leave that out. And it threatens to further divide an already incredibly polarized country. Now, none of that looks like it has any effect on market assets or prices so far today. Take a look what's going on here in futures. We continue to gain after a positive finish yesterday. We've had a positive March and a positive first quarter as well. Remember, today's the last day of the week, the month, and the quarter. So looking at gains here, maybe a little bit of window dressing. Investment managers need to show their clients that they're putting that money to work, and also a little bit of momentum. You mentioned the tech stocks, and they have done very well. In fact, if you take a look at the biggest tech stocks, they're responsible for 160% of the S&P's gain so far year to date. So we do see the 10-year yield, I guess, climbing a little bit, but really unchanged, right? 355 is the level there. We've seen that over the last couple of days. NYMEX crude also not much changed at 74.40, and Bitcoin, although it's down $300, it's only just below 28,000. So that kind of resilience has been really incredible to watch, although in a very thin liquidity market. In terms of pre-market movers, there are a lot of big individual stories out there. Virgin Orbit Holdings down 50%. This is the company, the satellite launching company tied to Richard Branson. It is ceasing operations indefinitely, succumbing to growing cash crunch pressures that have paralyzed a lot of other startups in emerging technologies. This company said in a filing yesterday it is cutting 85% of its workforce in order to reduce expenses, and the remaining 15% are just going to be there to wind down the company. Las Vegas Sands gaining in the pre-market. This is really interesting because Moody's changed its outlook on Las Vegas Sands debt to a stable from a negative, and Bloomberg intelligence analysts say that hints at rising star status in the works from maybe S&P and Fitch as well. Las Vegas Sands has benefited from China lifting its zero COVID policy, pointing towards improving credit metrics and liquidity. Still, BI says this balance sheet repair, and that's something I want to talk with Nouriel Roubini about, balance sheet repair all over the place. This could still take months. And then finally, Nikola announced a $100 million offering after the close that follows a $300 million offering from Bed Bath & Beyond, and of course Virgin Orbit, and many, many companies that are just running out of cash out in the markets begging for more, but the markets don't like that, obviously, and Nikola, which is essentially a penny stock now, down 5.7%. Anna, what do you see going on in Europe?
We see increasingly positive trade in Europe this Friday. We've been pretty flat for much of this morning's session, just 2.5 hours into our European trading day, and stocks in Europe are up by 0.3%. The euro-dollar is interesting, probably driven more by the dollar side of things, although that seems to be fading, and now little movement in the euro and the pound, just both of them down around 0.1% against the US dollar. On the eurozone side, we got that inflation data, and reassuring for policymakers, it showed a decent drop down from the prior level, also below the estimates in terms of that headline print on Eurozone inflation. That comes a day after we saw a 3% handle on Spanish inflation. So things moving in the right direction, but once again, concerns that core is remaining pretty sticky, and that was again the case today. The pound down 0.1%, as I say, against the US dollar. Here we've had a mixed set of data. Yes, the GDP numbers for the fourth quarter have been revised up just very slightly. Confirmation once again we avoided that technical recession, but the housing market showing signs of weakness once more here in the UK. And Air France-KLM, I put this in, Matt, just as an example of an aviation stock. We've seen upgrades to various companies in this sector from Deutsche Bank, also from Barclays, and so as we see that, the sector flying high this morning.
All right, we'll continue to watch those high-flying airlines or plane makers as well. Right now, I want to get, though, to U.S. politics. Former President Donald Trump is expected to be arraigned as early as Tuesday after being indicted by a grand jury here in Manhattan. Back with us for more is Emily Wilkins, Bloomberg government reporter. So give us, Emily, the details as we know them on the morning after.
So there are some key things that we don't know yet, including exactly what the charges are at this point. But we know that former President Donald Trump has been indicted, really an unprecedented moment. It will be fascinating to see exactly how this plays into his run for president in 2024. As you mentioned, Matt, we know that he is expected to be arraigned as early as next Tuesday. And we know at this point that we're seeing Republicans rally around him. Congressional Republicans, even some who have kind of sought to distance themselves from Trump a little bit, have called this a political witch hunt. They have vowed to investigate Manhattan DA Alvin Bragg. And this is really going to be very fascinating to see how it plays out just because of the unprecedented nature of it. And of course, remember, this is not the only charge that Trump potentially faces. There are also cases underway in D.C. as well as in Georgia that could wind up leading to other indictments.
And can I ask you about something else that's very politically active over in Washington right now, Emily, and that is bank regulation. We spent a lot of time talking about the turmoil in the banking sector, and now the White House flagging that tougher rules, in particular for mid-sized banks, could be in the works.
Yes, so these are banks that, like Silicon Valley, had assets between $100 billion and $250 billion, and they include reinstating some rules that were previously rolled back. These are things that deal with liquidity requirements, enhanced stress testing, and making sure that some of these banks have a so-called living will that would basically say how the banks of that size would be wound down. And this is really coming as the White House. It's their most comprehensive response at this point to Silicon Valley and the subsequent banking crisis. And it comes at a time where Congress really, it's hard to tell whether they are going to be moving on any regulations. You have Republicans pretty firmly saying across the board that they don't want additional regulations on banks. Of course, there are some questions. Could you see some other things around the edges? Could you see some transparency measures occur at this point? But it's still a little bit too early to say exactly what, if anything, really, might wind up coming out of Congress.
All right, Emily, thanks very much for that. Emily Wilkins across all of it for us out of Bloomberg Government in Washington, D.C. Let's talk about the banking crisis and the resultant fallout right now. Joining us for more is an exclusive interview from the Ambrosetti Forum in Cernobbio, Italy, Nouriel Roubini. Nouriel, really appreciate your time. And this seems to be something that's incredibly elementary. Your incoming freshmen at NYU already know that when rates go up, when the yield rises, the price of the bond assets falls. Is that the simplest explanation for what happened in terms of the banking crisis here in the U.S.? And were these just idiosyncratic problems with bank managers that didn't know what they were doing?
Yes, it's a good part of it. Both bank managers, regulators, and investors forgot about duration risk and market risk. When yields are higher, the price of the bonds is lower. Investors lost 20% last year on 10-year treasuries. The S&P 500 went down only by 15%. And for the overall U.S. banks, you have about $620 billion of unrealized losses on the securities out of a capital of $2.2 trillion. And for some of the regional banks, the number are much higher. But it's not just the securities have lower value. Many of the banks had issued loans like mortgages at fixed rates at 30%, 30 years, when interest rates were 1%, while right now there are 3.5 for 10-year treasuries. So the market value of those assets is also down. People have estimated, therefore, the overall losses for the U.S. banking system for the rise in interest rates, both on securities and loans, are equivalent to $1.8 trillion out of a capital of $2.2 trillion. Hundreds of the smaller banks are literally insolvent. So that's the fundamental problem. When interest rates go higher, the value of securities and loans is lower, and then we have mass liquidity and solvency problems.
Your recent book was called Mega Threats, 10 Dangerous Trends That Imperil Our Future, and I wonder if this is among them. You know, interest rates at 5% or even 6% don't seem like a mega threat. We've had rates as high as 20% in recent history, in the early 80s, but we have so much more debt now than we did back then, which means carrying costs are much more painful. Is this higher rate regime a mega threat, Nouriel?
It is, because in the 1970s, when we had the stagflationary shock that led to inflation and recession, debt ratios in advanced economies were only 100% of GDP, private and public debt. Today, there are 420. So we have the worst of the 70s in terms of negative supply shock, reduced growth, and cause inflation, and we have debt ratios that are much higher than after the GFC crisis. And during the GFC crisis, we had the debt problem, housing debt, mortgages, bank debt, but we had negative demand shocks and a credit crunch that led to deflation, so we could do massive monetary, fiscal, and credit easing. Now we're entering a recession and financial instability, having to raise interest rates because the inflation is too high. So we get inconsistency and a trilemma. We cannot achieve price stability, maintain economic growth, have financial stability at the same time. So eventually we'll have an economic and financial crash.
I mean, central banks say they can do those two things. Good morning to you, Nouriel. They say that they can have financial stability and they can control monetary policy because they're different levers dealing with different problems. You doubt that?
Yeah, there's this separation principle that says we're going to use the interest rate policy for price stability, and we're going to use liquidity to backstop the financial system and have financial stability. But that occurs only when the problems of the financial system are purely liquidity and limited to individual institutions. When you have a systemic problem and there is a risk of insolvency, and by the way, an economic recession is going to lead us from duration and market risk to credit risk, you cannot essentially lose liquidity support of the banks as a way of backstopping the system, and there's an inconsistency between price stability and financial stability. And we're headed towards a hard landing, a credit crunch, and significant amounts of losses, both for debtors that are facing much higher nominal and real rates, but also for savers and creditors, because rising interest rates reduces the market value of their creditors' assets. So you have financial instability, price instability, and economic instability.
Nouriel, you used the phrase credit crunch, and we all threw around the term credit crisis in the late 2000s. We know that that led to the financial crisis and everything that followed. How bad do you think this credit crunch gets this time around? We heard the Fed uncertain, and many voices uncertain about how much we see a pullback in the offering of credit.
Well, most of the financing to SMEs and to households in the U.S. occurs not from the large money center banks, but from these regional banks. And these regional banks are in trouble there is deposit flight, there are uninsured deposits, there are fundamental security losses. There'll be a tightening of credit and credit standards. They have to be more cautious. They'll have to raise capital. So they're going to lend more. Credit growth is going to probably go from 10% annualized to closer to zero. And therefore, a good chunk of Main Street and Middle America is going to be subject to a significant credit crunch. That's going to exacerbate the risk of a harder landing of the real economy.
Do we have, I want to change subjects a bit, Nouriel, and talk about another threat that Steve Ratner has raised in a New York Times op-ed. He thinks working from home is a real problem for America, for American productivity, especially as Europeans and other cultures return to the office. Do you believe that it's going to be an issue if we don't get back 5 days a week? Is that going to be a problem for productivity?
Well, there are different views on it. Some people believe that the optimal situation like now, having 2 or 3 days at home, 2 or 3 days at work, is okay. Depends on the type of professions. But I think the biggest issue with the labor market right now is that we have unemployment rate very low. We have aging of population. We have the falling labor force participation rate. We have restriction to migration. We have beginning of labor strife and strikes and so on. We have the great resignation. So we have wage inflation around 6%, and people don't want to go back to work because the labor market is tight and they have now power. That means that inflation is not going to fall towards 2%, because in the service sector, the main cost of production is labor cost. And if wage inflation stays around 5–6% with the tightness of the labor market and the power that people have to stay at home, then inflation is not going to fall. And therefore, the Fed will have to hike rates much more than 5%. And if they don't do it, because they worry about an economic and financial crash, there'll be eventually a de-anchoring of inflation expectation, a wage price spiral, and we're going to end up with high inflation, recession, and the kind of stagflation like we saw in the 1970s.
Nouriel, thank you very much for joining us. Nouriel Roubini of Roubini Macro Associates, also, of course, author of the book Mega Threats. Great to have his perspective on the program, coming to us live from Cernobio, from the Ambrosetti Forum, in northern Italy. Coming up, more on Trump's indictment with Peter Trubowitz, LSE Professor of International Relations. This is Bloomberg.
What's the best investment advice you've ever been given by anybody?
The compound interest, the compounding of returns is an incredible miracle of business, finance, and human existence. Everything you learn is additive every day, and if you keep at it and don't quit, it's an incredible miracle. And it's not just interest. It was always said about compound interest returns, compound business returns, compound human returns. They're all very additive because you learn every day. And if you keep at it, it's very, very helpful.
In your observation of investors, what do you think is the biggest mistake that average investors make?
Selling at the wrong time.
And they sell when the prices go down?
Yes. Or yes. Not keeping, look, people have conviction, or they invest for if they invest for the right reasons, just keep at it.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
He's still the front runner in the Republican, amongst the field of Republicans for president. So, I think we'll see what happens. Obviously, Democrats will have to condemn him. This is something that somebody else actually already went to jail for. But how the Republicans play it out, I'm really interested in seeing the line that they're going to have to walk. The people who are with him are going to be with him, and that's not going to change.
Kristen Hahn there, partner at Rock Solutions, a bipartisan public affairs and strategic communications agency, speaking with Bloomberg yesterday after the news of Donald Trump's indictment. Trump's lawyer says he is expected to be arraigned on those charges as early as Tuesday. We still don't know exactly what those charges are. Joining us now for more is Peter Trubowitz, LSE professor of international relations. Professor, thank you so much for joining us. As I say, there's a lot we still don't know. But one thing that seems certain, this looks like it will further divide an already incredibly polarized America. Do you agree?
Yeah, I think in the short term. Good to be with you, Matt. Like you said, we need to wait for the details of the grand jury's decision, when that's revealed. Presumably that's next week in court. And people are rushing to judgment without the facts in front of them. But I think this much probably can be said, that domestically, the indictment will have different effects, and this speaks to the issue of division. I think it's pretty clear it'll have a rally effect among Republican primary voters. But on the other hand, and of course Democrats will condemn it, but I think it will reinforce concerns about Trump's suitability for the presidency that independents expressed in 2020 when they voted against Trump's reelection. So yes, it'll divide kind of hardcore Republicans and Democrats. The interesting group will be the independents, it seems to me, in a kind of short-term sense.
I wonder what the Democrats, what the White House thinks about this. Surely they wouldn't have wanted Alvin Bragg to go ahead with this indictment, because there are much more serious cases pending, aren't there?
There are, and I think ultimately how this plays out domestically, and we can talk about it, it has potential international implications too. I think it's going to really depend upon whether this is the first of multiple indictments, whether the prosecutors in Atlanta and the Justice Department follow with indictments in what are, more serious cases. I think most people kind of would view those as more serious cases, and one could argue here, Matt, I think that the decision taken by the Manhattan grand jury, and people need to remember, it's a grand jury, it's average Americans that took this decision, makes the possibility of further indictments greater, I think, because the precedent now has been set. This has never happened before.
Okay, so this could be the start of something then, in your view. You mentioned international implications there, Peter, and it's easy to see how this will dominate the domestic scene in the U.S. Right now, here and now, and for some of the future. But what is the international relevance of this then?
Well, I think if we follow, if it does have a rally effect within the Republican Party, which we can already see that taking place, it will reopen questions about the credibility of America's international commitments, because it will raise fears about what might happen in 2024, and that kind of Trump or another American firster will come back into office. It will stoke those concerns. I think it'll put pressure on Biden to reinforce those international commitments, at least rhetorically. And so, this is an ongoing issue for the United States internationally, the concerns about the credibility of its commitments. Of course, the administration's actions in Ukraine have reassured many, at least in Western democracies. But nevertheless, lingering in the background is the possibility in people's minds of a Trump restoration, either with Donald Trump or somebody that is echoing that America First position.
Okay, yes, I can imagine that those at NATO and many in Europe will be wondering, as you describe, overnight perhaps. Peter, thank you very much. Professor Peter Trubowitz of the LSE, thank you very much for coming to speak to us today. Coming up on Balance of Power, they will, of course, stick with this story. Mick Mulvaney, Donald Trump's former acting chief of staff, will be joining the team. That's at 5 p.m. in New York, 10 p.m. in London. This is Bloomberg.
We're investing in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in this store, so that we can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that here to stay, or do we go back when finally we all hope that the pandemic will be behind us in some way? Do our changing shopping habits go back again?
What's really interesting about retail in my 20-plus experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000 to 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. Yeah. There's nothing closer than the phone in your hand.
Lots happening on Wall Street.
I'm quite encouraged. The center is holding.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
A lot of these areas still have very, very good valuations.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
Now's not a great time to be speculative. It's time for a pivot. We're talking about a significant hit to our standard of living.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller in New York. Whilst we focus, Matt, on inflation and US politics, we don't take our eyes off what could be the next shoe, some people say, real estate.
Yeah, absolutely. I mean, we see office space, empty office space continuing to grow here. And I think this all ties into the work from home debate spurred by the stimulus we got. There's still $900 billion left on Americans' savings accounts, excess savings. And that may be why they're not coming back to the office. That's it for Early Edition. Surveillance with Tom, John, and Lisa is up next.
most actors are thrilled if they have one part like Rocky in their whole career.
Yeah.
You had another one, Rambo.
Yeah.
Now, Rambo was not something you created, is that right?
No, Rambo was a novel by David Morrell, and I was the 11th choice. Everyone, it was like, I don't know who was next after me because they had gone through everyone, and it passed, including 3 different directors. So this had become sort of a pariah of sorts. The first time we go in there, Rambo was, in the original screenplay, was horrible. He was a psychopath. He killed children, he killed fishermen, this and that. So I said, if I'm going to get involved with this, I see the character going on beyond this. And they said, what do you want to do? I said, I want to rewrite the screenplay. And I want him to go right to the edge of violence, right to the point where he's being pushed, but he pulls back because, similar to James Dean in East of Eden, he wanted to be accepted back into the family of man.
So if Rambo got in a fight with Rocky, who would win?
Rambo.
Rambo.
Easy.
Because
not even a fight. Unless it's in a ring. See, first of all, Rambo is a killer, for real. He's almost a psychopath when that switch flips. Rocky is a good guy. You know, he has mercy. The other one has no mercy.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology. And welcome to Balance of Power.
This is Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 1 p.m. Eastern, right here on Bloomberg, your global business authority.
That was a clear message from Chair Powell last week that the economic data still matters.
I think the Fed can continue to have the narrative of hiking.
They're really ready to continue to push short rates higher until the household and business pain is felt.
We have this huge disconnect between where the dots are and where the market is.
People are expecting the same sort of performance we saw post-COVID, and I think the conditions are just very different. It's not as supportive for that.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Our studios in New York, on radio, on television. And it is simple. An American president has been indicted for a crime. We will do economics, finance, and investment through the morning. Lots on inflation, particularly at 8:30. But there is a different story. And Lisa, this is what you studied at Chicago. It is original American history yesterday afternoon.
So we did get an indictment for former President Trump from the New York authorities. There is a question of what the actual charges are. We get those, I believe, on Tuesday. They are still sealed. When he gets arraigned, that is what we're hearing about. The question that I have is, what does this do to the landscape, A, for the Republican election, for the ongoing election in 2024, but B, for confidence in the U.S. political and judicial system?
I think that's absolutely right. The confidence of people, whatever their political persuasions, it's something we're going to dive into through our 3 and indeed 4 hours today. It's an overlay of all that we're looking at, particularly key economic data at 8:30. But we're going to stay on this story in this opening block of Bloomberg Surveillance. Greg Vallier to join us here in moments with decades of perspective. Lisa, I've got to look at the markets and all and just simply say, boy, do we end the quarter strong. Where were you January 1st saying, Tom, load the boat on the NASDAQ?
Oh, yeah, obviously. I definitely was. I was really bullish. Didn't you hear me?
Yes,
Honestly,
I know.
okay, so let's be honest. Right now, we don't understand why we're getting the data that we're getting when it comes to what stocks are doing. The fact that S&P is north of 4,000, the fact that we're talking about more than a 20% rally since the lows in December on the NASDAQ.
That's a bull market.
It is a bull market, or is it a bear market rally? This has been sort of the big debate when people say, what does this mean for the road ahead?
To me, the big debate is these flows within the banking system. Some really good things out there. I was with Quinnipiac yesterday at the Game Forum, and everyone there was talking about Jim Bianco of Chicago, who said, look, focus on 5%, and that's something we're going to have to do through the morning.
And when you talk about 5% money market funds, the cash into those still just
and we don't know. We don't really know what that cash is yet, do we? I mean, it really hasn't come out.
Well, we don't know if it's coming from small and regional banks, to your point. So what we're looking for today is perhaps a little more guidance on what people's appetite is to spend. At 8:30 a.m., we get U.S. personal income spending, as well as core PCE for the month of February. To me, this core metric, how much does it really decelerate, or does it actually accelerate, like we've seen even in some places in Europe, as we've seen the overall measures decelerate? To me, do we start talking about the data again if we start to get some pretty surprising numbers?
And John is out today, but I think John was dead on a couple days ago where he said we have data mystery here going forward to May 3rd. And some of the mystery maybe clears today, but I like your idea that one inflation series says, okay, better, but another inflation series says does not.
Well, and so we perhaps are going to try to get some indication from central bankers.
Is there an auction today?
No, but we are going to be hearing from a lot of central bankers. 11 a.m., Christine Lagarde of the ECB is giving a speech in Florence. Very curious to hear how she dovetails some of the softening that we've seen in overall headline inflation reads in Europe with their hawkish prognostications about continuing rate hikes. And then on the slew of Fed speakers, we have of 8:45 a.m., Fed President of the Boston Federal Reserve on surveillance with Michael McKee. And later in the day, New York Fed President John Williams, Fed Governor Lisa Cook, and Fed Governor Christopher Waller at a time when the prognostications yesterday left you just as muddled as anything else. Basically, we don't know. We're watching, well, like the rest of us.
Mike McKee, with his leadership at the National Association for Business Economic Meetings in Washington, they've got a superb post-pandemic lineup there the last number of days. If you get lucky, and you do, with history being made with former President Trump, your chief Washington indictment correspondent is in New York, and we are so lucky to have with us through all of the morning Anne-Marie Horton, of course, of Balance of Power as well. What was it like last night on Balance of Power when you had to blow up the show? It seemed like everyone missed seeing this indictment coming.
That's true, because there was reporting that they thought this was going to be still weeks out, that the grand jury still did not come to this conclusion. There's going to be still more weeks. The New York Times, Maggie Haberman, is reporting that it really took Mar-a-Lago and Trump world by surprise and how quickly this came. But, of course, the former president also, more than a week ago, talked about that he was going to be arrested, and he has been going after Alvin Bragg. And a lot of people thought potentially this is just the former president trying to rally his base. At the end of the day, it was not just that. He really was, in fact, indicted.
We're thrilled you're with us this morning. Of course, are you on Balance of Power tonight? Or
of course, I'll go through the whole day.
Anne-Marie Horton, of course, tonight, and she'll be with us through the morning as well. Lisa and I also get lucky to have with us Greg Valliere, Chief Political Strategist at AGF Investments. Greg, Lisa's got a whole lineup of questions having to do with the indictment. I want to talk to you about the generational realities, and that was that Donald Trump was 28 years in 1974 when your Washington was turned upside down by a congressman from Arkansas. And that was Wilbur Mills. As part of this uproar of indictment and arraignment and all of the former president's fury, is part of it a generational difference here in what we saw and lived in 1974 versus 2023?
Well, there are a lot of angles to pursue, Tom, and that's one of them. I guess I would start by saying Lisa's right. We haven't unsealed the documents, so we don't know for sure what the allegations are. If they're what we think they are, my take would be this is a fairly weak case, a novel legal theory relying on a convicted felon. The next three are huge. The Georgia vote, the taking of secret documents, and of course, January 6th. This is just the appetizer, the hors d'oeuvre. Bigger stuff is yet to come.
We also talk about the potential for its effect on the 2024 elections. We did hear from DeSantis talking about sort of not mentioning Trump by name, but saying that he wasn't going to allow him to be extradited from Florida to New York. I'm curious what this does to the Republican landscape. Does this basically suck the oxygen out of the room?
To a large extent, yes. I think that the headline to me would be Trump has better chance of winning nomination, worst chance of winning the general election, which is the name of the game, in my opinion. I think that the Republican reaction was Pavlovian, whether it was Mitch McConnell or he was one of the few who didn't praise Trump. But Kevin McCarthy and virtually all of the Republican presidential candidates embraced him and said this was unfair. I think he wins the nomination and loses the general election.
I want to read the statement from the former President Donald Trump. This is political persecution and election interference at the highest level in history. The Democrats have lied, cheated, and stolen in their obsession with trying to get Trump, but now they've done the unthinkable, indicting a completely innocent person in an act of blatant election interference. This piggybacks on a Gallup poll that found that only 14% of respondents had a great deal of confidence in the criminal justice system, down from 20% from 2 years earlier. Greg, how much does this continue that path of the erosion in the confidence of the U.S. system?
Well, it does, and it helps Trump. Trump is brilliant at playing martyr. He loves the publicity, so he's gotten the mother load right now. But the bigger issue, you're absolutely right, is confidence. That's big for the markets, for the economy, for the country as a whole, and I think confidence will continue to erode.
How do you rebuild that, Greg?
Takes a long time. First of all, you'd like to see the economy get a little less confusing. I think that would help. You'd like to see these indictments end, but we're looking at months and months to go with more indictments, more legal appeals, with Trump making claims that actually decrease public morale.
Greg Valliere, thank you so much. Too short a visit this morning with AGF Investments. I'm sure we'll be speaking to Mr. Valliere sometime next week towards arraignment, and that will be most interesting, and we again get perspective from Anne-Marie Horton here. I think everyone knows now, we're all learning Civics 101, that you're expert at, that we have an indictment, and then I guess we have an arraignment, and there's numerous articles about this. But what does your Washington look like off the Sunday talk shows into Monday, into Tuesday?
Even more divided. So you're going to have the Democrats, and I think to Greg Valliere's point, is for Donald Trump, his path to be the candidate and win that is much more sure or likely than him being able to win a general election. So for the Democrats, all this drama around Trump does very well for those that could potentially vote for a Joe Biden second term, right? These are the independents, these are suburban women, etc. But for Republicans, these are going to harden their divide within the party. You're going to have the ones that support the president dig in their heels. He just mentioned Speaker McCarthy, these individuals coming out saying this is outrageous. Lindsey Graham last night on Fox News telling people to go donate to the former president, to go on his campaign website. And then you're gonna have those that really want, like the Chris Christies, really want to separate themselves and change the party. They are going to come out even bigger and say, we can no longer win. The former president did not win a second re-election. The former president was the reason why many Republicans are saying there was no red wave in the midterms. They are going to say this drama needs to end for us to start leading again.
Can we dovetail this into some of the other issues that otherwise would be dominating our discussion, whether it's the debt limit, whether it's the considerations about the banking system and what needs to be done there? How much does this change the positioning, like harden the lines in effect on some levels to getting a deal done with respect to the debt ceiling because of this quest to adhere to a certain wing of the party?
It's going to be incredibly difficult, especially for Speaker McCarthy, right? He does not want a clean limit that the White House says. And if his speaker vote, 15 rounds tell you anything, it's that he is also beholden to the fringe part of his party. And they are going to dig in their heels even more. And this is becoming even more than just about the negotiations of budgets and debt ceiling. This is going to be about digging in their heels because the Democrats have been, quote unquote, unfair.
Do you have any, very quickly here, do you have, and we're going to continue with Emery through the morning, do you have any belief that the president will, quote unquote, lawyer up? That with this indictment,
he has a team of lawyers.
People come in.
He has a team of lawyers. The most notable one, Joe Tacopina, has been on all of the shows over the past week, trying to get out in front of this and defend the former president and say that Alvin Bragg does not have a case.
Anne-Marie Horton with us. We are so lucky to have her in New York today. And of course, Balance of Power tonight will be something at the 5 p.m. hour. Joe Matthew and Anne-Marie Horton with that as well. We do economics, finance, investment, yes, a touch of international relations as well. Stunning inflation out of Sri Lanka earlier this morning, near 50% uncontrolled inflation. Futures, what a shock, end of the first quarter. They're up. I'm stunned. This is Bloomberg. Good morning.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Well, as you've been hearing here on Surveillance, for the first time ever, a former U.S. president has been indicted. His lawyer says Donald Trump is expected to be arraigned on charges as early as Tuesday. A grand jury in Manhattan decided there was enough evidence to proceed with the case against him for directing hush money payments to a porn star during his 2016 campaign. The exact charges haven't been made public. The former president calls it political persecution and election interference. The White House is taking its strongest step yet in response to the banking crisis. It's pressing regulators to tighten the rules for mid-sized banks following the collapse of the two regional lenders. Now, the White House says that deregulation of the banking industry went too far. In the euro area, inflation fell by the most on record, but core inflation set a new high. That highlights the tricky task facing the European Central Bank as it decides how far to lift interest rates. Consumer prices were up 6.9% in March from a year ago, down from 8.5% in February. Core inflation, which excludes volatile items like energy, rose 5.7%. Finland has cleared the final obstacle to joining NATO. Lawmakers in Turkey unanimously voted Thursday to ratify Finland's entry into the military alliance. The vote seals a major change in the European security architecture. Finland and Sweden sought NATO membership following Russia's invasion of Ukraine. Turkey and Hungary still oppose Sweden's entry. And Bloomberg's learned that Tesla is looking to build a battery plant in the U.S., and it would likely be a controversial arrangement with China's dominant electric vehicle battery maker. In recent days, Tesla discussed plans involving the company CATL with White House officials. Global news powered by more than 2,700 journalists. I'm Lisa Mateo. This is Bloomberg.
Countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. The moment news breaks, no one covers the world like Bloomberg.
We've never seen anything like it. This was a decision that maybe was the best out of three very bad decisions, but it could prove to be a mistake.
She opposed Powell's renomination. She called him a dangerous man in 2021. And now she is really pointing the blame at the Fed.
We're expecting that she'd be here in Brussels today. This is a meeting that happens regularly, but obviously today it will be all about the banks.
Bloomberg, your global business authority. The top names in business are on Bloomberg.
Do you foresee a future where JP Morgan could potentially re-enter the Russian market?
One day, maybe, but it's very possible that won't happen in our lifetime.
Nobody covers business like Bloomberg. Bloomberg has the Fed coverage you're looking for. Today, an exclusive interview with Boston Fed President Susan Collins.
Restoring price stability does remain our imperative.
For all your Fed coverage, keep it tuned to Bloomberg, your global business authority.
For me, it doesn't come as a surprise at all that the mistake of transitory inflation and the mistake of not moving fast enough to begin with which then resulted in the massive increase, resulted in accidents. When you are overly data dependent, and the Fed is overly data dependent, when you're acting with tools that have impact over time, you can't react to every bit of data. You have to have a strategic anchoring.
Mohammed El-Arian there in Shinobio with Francine Lacroix. I've been. Guess what? It's not as romantic late March as you'd think. It's beyond cold. We were freezing out there. Francine had frostbite, on her nose one year. It was so cold there.
I feel for her.
I figured, I had my floaties on. I was ready to swim in the lake, and forget about that. There were icebergs out there as well.
But what we were hearing there from Mohammed El-Arian echoes what we heard from Vincent Reinhart yesterday. This idea that if you take a look back, this was really a failing of zero rates and negative rates for as long as they were, and now we're dealing with the train wreck of trying to normalize something that was incredibly abnormal.
And what's interesting here, and it was a huge theme yesterday with Quinnipiac in the Game Forum, Jim Bianco, I believe, scheduled to be with us later, is it wasn't just David Folkerts-Landau of Deutsche Bank saying this will have huge balance sheet effects, but when we come out of negative rates, the rate of change, the calculus, the speed, the acceleration that you have, that's where we stand here at the end of March.
Exactly, which is the reason why nobody knows anything, and we're all just sort of chasing our tails trying to figure out which data to look at, because this is an unusual moment.
We welcome all of you on radio and television. Yes, we will cover the political events in Washington and what we will see in New York, I believe, on Tuesday. But also, we will stay on Bloomberg's surveillance plan and do that strong now with Margie Patel, Senior Portfolio Manager at Allspring Global Investments. Margie, you're a genius. You told us in early January, have faith, have confidence. You have to participate in the markets, and certainly we've seen that with a general lift, a NASDAQ lift as well. For income, do you still skew for equities versus income from bonds, notes, and bills?
Yes, because we should have some short-term volatility, probably slower economic growth, bad news from the Fed. But high yield right now only offers, say, 7 to 9%. And considering if we have rates go up, that could be eroded somewhat. So it seems to me the opportunity says hold in there, take the volatility, stick with the equities.
Is part of a balanced portfolio now dividend growth? Not the dividend itself, but the growth of future dividends?
Yes, because you easily could see companies raise dividends by, say, 2, 3, 5, 7%. So in a few years, those dividends would be competitive with a fixed rate investment grade bond.
Right now, we're also looking at anecdotal data that can tell you the story that you want to see. On one hand, you could see very robust growth when it comes to economic trajectories and what we see with corporate profits. On the other hand, on the margins, credit card receivables, people are starting to spend a little bit less. You're starting to see confidence erode on the corners. How do you take this anecdotal data and say, really, just focus on the now, because that is going to tell you where we're going?
Well, I think it gives you the first hints that the Fed's process of raising rates so aggressively is having an effect in the real economy, and we're seeing more and more signs of that in the terms of weakness in certain areas and the economy decelerating. So it says you have to be more choosy on the equity side for companies that can still have earnings during a pretty difficult growth period over the next year.
What's the argument, Margie, for equities right now at a tenuous economic time versus bonds that are yielding more than they have in decades and at a time when their balance sheets look pretty good?
That's right. Corporate balance sheets look good. Even in high yield, it looks good. However, the yields themselves are only modest compared to what you've gotten for equities over the longer term. As I said, high yield is only, say, 7 to 9%. If rates go up on treasuries, if Powell continues to raise rates, you could see those rates go up, prices go down. And the equities, it's a good time to take advantage of the negative attitudes, the risks, the uncertainty, and say, I'm going to wait, I'm being paid to accept volatility.
I knew that's where Margie was going to go. Lisa, to me, this is so important within the MOVE index and the gyrations in the 2-year this morning, 4.16%, up 5 days in a row. In yield, we forget to look at flows. flows. And I think into this Friday, into the end of this quarter, the flows are a flow of gloom. I mean, people are scared stiff is the end of March summary.
Yeah, Michael Hartnett actually put out that there was more than $60 billion that flowed into money market funds over the past week versus about $5 billion withdrawn from equities. Margie, I do wonder, though, on the bond stock valuation proposition, how much pushback you get when they say, how can you hope for much bigger gains in stocks at a time when you're having an ongoing revaluation in a newly high-rate environment?
Well, I do think interest rates are going to be higher than they've been over the last decade. Certainly the zero rate period is past, so that means dividends will be a bigger part of return. However, when you look at the economy is in very good shape, especially relative to other countries' economies around the world. So that says to me, probably returns will be muted in equities, but that's just a year of muted returns. Looking longer term, I think they'll still do better than bonds.
Margie, what would you have to see to change your view?
Say again, I'm sorry.
What would you have to see to change your view, to make you less constructive?
Oh, well, I would say we've had one hint in the GDP data yesterday. We had GDP positive of 2.6%, but we saw profits actually negative by a small amount, about 2.7%. So is this a sign that the Fed's aggressive policy is really starting to bite into corporate profits and they can no longer pass on pricing power the way they did last year and maintain margins? So I would say that's my big concern. Also, the Fed aggressively continuing on this misguided path of aggressively raising short rates, not looking at the whole economy, just focusing on a few data points.
Right. You know, Margie, you go on Commonwealth Avenue, and if you go past the 0-1 Boston Red Sox at Fenway Park, you're going to get a lecture from Zvi Bodhi out at Boston University on the appropriate bond investment that a corporation should have, a bond issuance, I should say. To me, the biggest news of the last 10 days is United Healthcare's ginormous issuance. Are we going to see a lot more of that?
Well, we might, because there's a tremendous appetite still for fixed income securities, as you alluded to in talking about these flows in the money market. So a good company, investment grade or better quality high yield, yes, there's an insatiable appetite.
Margie, thank you so much. Margie Patel, Allspring Global Investments, rumored to be pitching middle relief for the Boston Red Sox after they gave up 12 or 14 runs yesterday. It was painful. Opening day is a religious experience.
Especially when the Mets win.
It's like Dante's Inferno yesterday. Anyways, let's move on here. What's so important there, I think, with Margie Patel, and describe this, Lisa. You do a bond offer, and it's like literally 4 phone calls, it's sold.
Well,
I mean, it's that simple.
There still are a lot of people who are saying that bonds are a better value proposition than stocks because you're getting historically high yields, at least historically over the past couple of decades of low rates. But you also are seeing that companies are in a better position. And then you see what the actual returns are doing, and stocks are still outperforming. So at what point do you lean into that? Just like Margie said, despite all of the naysayers, despite people saying that higher rates cuts valuations over the longer term.
And then part of this is a consensus view. You identify what's consensus, and then you go against it, I guess, is the easy theme.
Yeah, good luck trying to find consensus right now.
Good, yeah, exactly. Finding consensus is sport. I mean, where are we on the flows thing, deposits, money market funds, and all that?
Yeah, money market funds have reached a record, at least in the U.S., $5.2 trillion. Still a question around inflation. That's why I think that today at 8:30 is going to be a really important moment when we get a sort of gut check on whether core inflation in the U.S. is actually coming down. In Europe, it's not. Yeah, the headline numbers are coming down, but underlying core inflation in the Eurozone hit a new record. We just got that data this morning, and that, to me, just highlights, again, a dissonance with people trying to focus on ongoing weakening when you're not getting that same kind of read-through to inflation.
Personal income, real personal spending, we'll see all that at 8:30. The PCE deflator, Michael McKee is focused on that. He's focused on that because 15 minutes later, he'll be speaking to Susan Collins of the Boston Fed. She's an extraordinary academic. I really can't say enough about her work. Gramlich professor at the University of Michigan, Susan Collins of the Boston Fed, with our Michael McKee at 8:45. Please stay with us. This is Bloomberg Surveillance.
governments, we have a responsibility to create the incentives and the space for you to flourish, a receptive environment for change, and the accountability that comes with guardianship. In many nations, the foundation for this approach has been laid for us long ago if we choose to listen. Where I come from, Aotearoa, New Zealand, a beautiful place you must visit, our Indigenous people hold a worldview that every single living and non-living thing is connected. Our people, our plants, our animals, descendants of Ranganui, the Sky Father, and Papatuanuku, the Earth Mother, and their children. And so it follows that people and nature are kin, are family. And we must care for one another in the spirit of kaitiakitanga, which translates into guardianship by the people of the land for the next generation.
Bloomberg surveillance and welcome on an historic Friday. A former president has been indicted for crime in America. That'll be part of our theme through the morning as we stay on surveillance script, economics, finance, investment, and such. Great guests coming up here in moments. Futures up 7, Dow futures up 74, NASDAQ goes the other way fractionally, and the VIX still under 20, 19.24 with an 18 glimmer. Earlier, Bitcoin with some resilience here at 28,000. And Lisa, you and I, where do we go first in the terminal? We go to the 2-year yield, 4.16%. 5 days in a row, higher yield.
And when you take a look at how that bleeds into Fed funds projections for later this year, fewer
What's that
rate
parlor
cuts,
game? Come
right?
on, bring it. You know I don't follow this.
I love this.
Go.
And I know that you love it, so I really wanted to help you out, given the fact that there aren't auctions today. 4.3% now expected for the Fed funds rate in January of next year. That's up from under 4% just a couple of trading sessions ago. So, you know, fluctuating, pushing up a little bit. Can Fed officials guide that a little bit higher to give sort of pair a little bit more with the feeling that they're going to hold rates and not cut them later this year?
It's like Farm Journal 15 years ago. Farm Journal with Lisa Abramowitz. You get the parlor game with Lisa here on what's out there. I understand it's a big deal. And the thing about it, before we get to Bill Lee, is the curve has really shifted. The parlor game has really shifted over 90 days.
Suddenly people are back to lower for longer. There's an issue about where China fits into this because we stopped talking about it for so long, right? Basically, the reopening that didn't happen. And we got some new data out of China, and it shows that the economic recovery is actually accelerating. We saw non-manufacturing PMI jump to 58.2 in March. That is the highest figure going back to 2011. Manufacturing, services, and construction all also are strong. And I have to wonder, Tom, at what point we start talking about, once again, the read-through of stronger growth in China affecting commodities, affecting growth, upgrading some of the projections that we're getting from others.
I'm really glad you did this because I think it has been the 14-day conundrum, I'd say. And I go back to Goldman Sachs and Hatzius and others at Goldman Sachs lifting up their China call after a lot of thought. We have two themes this morning with William Lee. Bill Lee is chief economist at the Milken Institute, preparing for those important West Coast meetings. We must get to California and the San Francisco Fed with Dr. Lee here. But first, Bill Lee, on China as well. The last time you were on, you partitioned to China of domestic economic resurgence and their foreign effect as well. Is that still a two-part discussion?
Oh, Tom, is it ever? The latest PMI numbers show that the boost to Chinese activity is coming mainly from the non-manufacturing sector, both construction and the service sector. In fact, the momentum in manufacturing has eased off because exports have eased off. The global economy just isn't recovering enough to boost the Chinese manufacturing sector back to where it was in the pre-COVID kind of trajectory. And China's policy has been oriented toward boosting domestic consumption, and looks like this rebound from the COVID lockdown is part of the down payment for that. The real question is, will this sustain itself? It's easy for every economist to say, oh, we can have a strong China right now. But, it's not going to be sustained unless we get income and we get property market settlements. And right now, those are still in the doldrums.
That's where I wanted to go. The solution always is A, keep the people employed in China, and B, always heal that real estate sector, which is so important for some form of individual investment as well. Is that occurring right now? Are the people employed, and is real estate healing?
The private sector in China is very reluctant to invest and employ people. Right now, the biggest problem is that the college graduates are not finding jobs. So you have youth unemployment rate in the double digits, like almost 15, 20%. And more importantly, innovation. Are we going to get the kind of innovation out of the Chinese technology sectors to be able to offset some of the trade restrictions? And right now, China is trying to boost that kind of research, but they also have reorganized government to change governance in a way that controls innovation. The governance structure now is that the ministries and the regulatory agencies are now all under the control of Xi Jinping. So that gives you a warning sign that says innovation will be for the benefit of the center. And Xi Jinping told us that in a speech in Shenzhen a year ago. So the fact that they're controlling innovation means that they may not get the kind of technological boost to improve productivity that they so desperately need, given that they have a declining population.
Bill, it seems like it's not a clean recovery story. It's a muddle, which means that people can kind of shrug it off and in their narrative whack-a-mole moment that we're in, move on to other things, whether it's the banking issues or whether it's just how long central banks can raise rates before things break. Bill, do you think that that's appropriate? Do you think that it has faded into the background and really the preeminent story here is the consequence of how quickly central banks are raising rates?
I think the biggest source of policy error right now is for the Fed to worry about what's happening to a couple of bad banks and the runs that are associated with badly managed banks, and to ease up a monetary policy. Conflating these two policies will cause the Fed to really miss the boat in terms of getting inflation under control and conflating a problem of bad supervision with financial stability. We don't have financial stability risk. We have a lot of badly managed banks that are being sniffed out by the markets right now. And the case in point is Silicon Valley. The San Francisco Fed and the bank supervisors have completely fallen off the boat in the sense that Vice Chairman Barr told everyone, we gave them 3 notices that they had to fix their governance structure, they had to fix their risk management, and they completely ignored us. Right. What does that tell you? That means we've got a broken supervisory system, not lack of regulation.
Okay, Bill, this is a really important nuance. Was it that state of lack of supervision or below average supervision, but was it overwhelmed by the rate of change of monetary policy?
It would be a nice narrative if that were true, but we don't. We have a really special environment in the West where the Silicon Valley crowd are really subject to groupthink and subject to social media influence. And so once we started having influential investors tweet, get your money out of Silicon Valley, there was a huge rush. And once that started, the story started getting carried that, my God, there's something wrong with small banks, as opposed to there's something wrong with the bad management at Silicon Valley Bank or the bad management at the crypto banks that are specialized in highly volatile industries. And I think that story got so exploded into the point where Janet Yellen and FDIC and the Fed all came out and said, we're going to have a blanket new borrowing lending facility to give liquidity to small banks. Well, not all small banks needed it because it was really the specifically badly managed banks that were not well supervised that needed the liquidity.
Bill, we'll be talking about the postscript and doing the autopsy on this for a long time. In the meantime, a lot of people are trying to game out how much lending standards are going to tighten, how much you're going to get a restraint, particularly with respect to the credit available to smaller businesses. Do you have a handle on this, especially at a time when a lot of people say we're not seeing it yet in empirical data?
You know, when I was at the New York Fed back in the 80s, that was one of the things that the President Corrigan was obsessed with, which is how much does lending by banks affect the economy? And the studies back then in the 80s, where banks were much more influential than they are now in terms of determining where the credit flows are going, we said that it was really inconclusive, that bank lending hits small businesses and specific sectors hard, but most of American industries and American businesses raise money through the capital markets. And as long as capital markets are able to keep the money flows coming, we won't have a crashing kind of effect on the U.S. economy. And I think that conclusion still holds today.
So if you conflate that, or if you bring that over, not conflate, but if you bring it over to what this means for monetary policy, are you worried that this Federal Reserve and even potentially the ECB, despite some of the hawkish rhetoric, will move away too quickly from the rate hikes, will follow the markets into rate cuts at a time when perhaps this economy is more resilient than people think, even with some of the banking stresses?
Well, I think there are some sane voices on the FOMC. I think Susan Collins, who you're going to have on later, has also said that we will continue to raise interest rates because we need to fight inflation, and we'll worry about the economy as it comes along. And if there is a sign of a credit crunch, we'll address it with supervisory. And these are my words now, with improved supervision and specific bank policies, not monetary policy. And I think that's the right way to go. And I think one of the things that we have to keep in mind is that failed supervision should not be interfering with monetary policy.
Bill Lee, thank you so much. For the Milken Institute, as he prepares with Mike Milken for that soiree, I'm sure Bloomberg will have coverage. We don't go to that. It's too early in the morning.
It's too early in the morning.
Bill Lee's the only one that'll get up for us at 4 a.m. in Los Angeles or whatever. There's Bill Lee there, just absolutely exquisite with his IMF thing. Let's talk about that. We really begin past this weekend and into April to look at the spring meetings of the IMF. These are unusual spring meetings.
When you don't have visibility on the moment, how do you create cohesive policy? And what we saw with Europe over the past couple of hours with respect to the core metric coming in hot, how do you look at backward-looking data and come up with forward-looking policy to guide an economy that is in a transition point?
How do you do a world economic outlook? The Blue Book at the IMF, I believe Gita Gopinath leading that charge. How do you do that with all of their abilities, given the rate dynamics and volatility we're seeing? I think is maybe the hardest task they've ever had.
When you look at the peripheral data, there's been a lot of discussion recently about the accuracy of government data at a time when people don't answer surveys because they have their cell phones and they're answering quizzes all the time and they don't want to just respond. And so people have questioned the accuracy, the low response rate of some of these data points. And then they say, well, if you take a look at the credit card spending, it's actually gone down quite a bit. Citigroup came out with a report recently, as did Bank of America. If you look around on the peripheries, you can see signs that
the tensions
on conference calls, earnings calls, people mention cutbacks more than they do, hiring, labor shortages. So these are sort of the anecdotal nodes of possibly something shifting.
He's large. I'm there with 1,200 people yesterday at this forum. It was phenomenal. It was great. We can talk about it through the show this morning. And this faculty member comes up from the South and she says, tell Damian Sassower we're so excited his offspring is attending Miami. I mean, he's a stud there. I mean, he's like, the whole emerging market thing and, Sri Lanka and Turkey, Argentina and all the rest. I mean, it's a disaster out there right now.
Well, a stud because of that or because of his bracket in University of Florida and what they're doing.
Probably endowing a chair.
There is a larger question about if we are on the precipice of a game-changing moment with respect to the U.S. exceptionalism. We were speaking with Mark McCormick about that yesterday and talking about the sort of weakening trend in the dollar, even amid some distress. Is there some significance there that has staying power? A point of some pretty heated debate. I'm ready.
Visible Argentine peso, 100, 120, 140, the agony that Argentina is going through now. And there's a black market Argentine peso. Yesterday, it went over 400.
Okay.
How does a society as sophisticated as Argentina live with that? I just don't understand.
This is the problem with 2023. You can point to Argentina, which has been a problem child with respect to inflation for a long time, and use that as an anecdote. And you can point to so many others that have a more secure situation. It's sort of an anecdote roulette.
Speaking of that, on our break, Lisa and I are going to review our problem children. It'll be exciting for the weekend. That'll get us in preparation for Daniel Ives of Wedbush. Must listen on tech. Dan Ives coming up. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. History has been made as Donald Trump becomes the first former U.S. president to face criminal charges. The Manhattan grand jury has decided there was enough evidence to move ahead with a case against him for his role in paying hush money to a porn star during the 2016 election. And Trump's lawyer said he could be arraigned as early as Tuesday. Trump described the case as the latest effort by Democrats to destroy the Make America Great Again movement. The Biden administration is going to unprecedented lengths to play down the importance of Taiwan President Tsai Ing-wen's visit to the U.S. It's an attempt to keep the relationship with China from getting worse. People familiar with the matter say Beijing's unhappiness may be more muted than expected. Tsai scrapped some of the events in the U.S. and limited her press engagements. Mohamed Al-Arian says the worst of the banking crisis is over, but the chief economic advisor at Allianz says there are still warning signs. Al-Arian spoke to Francine Lacqua.
This is not 2008. 2008 was a sudden stop, where things just stopped because the payments and settlement system was in play. This is very different. This will play out probably in the third and fourth quarter, and it will have a long tail. So it is very, very different from what we've experienced before.
Al-Arian also writes for Bloomberg Opinion. And the UK is joining an Indo-Pacific trade bloc in a major post-Brexit deal. The 11-nation comprehensive and progressive agreement for Trans-Pacific Partnership includes Australia, Japan, and Canada. Prime Minister Rishi Sunak's government sees a growth of $2.2 billion each year over the long term, and that could grow if others join the bloc. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader.
Yes.
And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Our studios in New York and San Francisco, our new hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech at a new time, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television.
This is Bloomberg.
There's still technology companies that are doing well. And this period reminds me of coming off of the kind of tech crash in '99. We had a very overvalued situation in tech. Many of these tech cuts are because the tech companies overspent or with cheap money just went into areas they should have never gone into. That's just a restructuring to get back to the basics and get back to where they're really adding value and making money rather than trying to send a man to the moon.
Steve Pagliuca there of the Boston Celtics, of Bain Capital as well. Lisa, the Boston Celtics are winning.
Yeah, he mentioned that.
The Red Sox will not lose today, okay, like they lost yesterday. The Boston Red Sox will not lose today. This is important, folks. They're not playing. That's why they won't lose. The Mets even win when they don't play. I mean, it's a magical gift that the Mets have.
Nobody has ever said that, but yes.
How about the tech rally? Talk about a victory.
So this, to me, is one of the big questions. We've had an almost 20% gain since the December low on the NASDAQ.
Apple up 30%.
Take a look at Meta, up more than 70% if you take look at the returns on Facebook. Is it justified? People saying this is just a head fake because of people pricing in lower yields, or is this something that is more sustainable, the year of efficiency coming to an area full of cash?
We're going to stop the show right now and get some humility with Daniel Ives. He's senior equity analyst at Wedbush now, who absolutely nailed, have courage, stay with Apple. You've heard me tell this story before. a zillion reasons Apple was going to blow up ago. Lawrence Haverty and I stood on Fifth Avenue and discussed all the reasons the Apple game was done. It's not. There were so many reasons to sell Apple 90 days ago. What did you see 90 days ago that gave you confidence to be long Apple?
It's the install base of Apple is still underappreciated by investors. And I think ultimately what we've seen with our checks in Asia is that demand, despite many yelling fire in a crowded theater, has actually held in more Rock of Gibraltar. And as that's played out, that's the key.
Let's get out front of Mark Gurman here, who owns the high ground on Apple technology gossip and all that. Is part of your calculus of Apple hire a new chip? Because to me, it's the chips at the bedrock of why they do well. Are we going to see new chips with this June meeting or soiree or whatever they're having?
Well, I think you have, and you're going to have chips as well as the AR/VR in terms of Apple Glass. And I think it just shows that even though many say innovations in the rearview mirror, you have the biggest install base in consumer, and now you're just further monetizing with services. And I think in these environments, you can never underestimate how bad a management team is or just how good the tactician, the Hall of Famer Cook, I think is again going to navigate Apple, in our opinion, back to a $3 trillion market cap.
When can we stop calling it big tech and talk about communication companies and hardware companies and cloud companies and something much more specific that caters to a very different cycle than perhaps each of the companies combined?
Well, I think that's starting to happen. I mean, if you look at like cloud, you look at Microsoft and what Nadella is doing in Redmond, that demand's held up, and that started to seep in what we've seen with Benioff at Salesforce and the broader group. Cybersecurity, I think, is a pocket of strength. But I think overall, and Lisa, you hit it on it great, in terms of big tech, the cost cutting, once that started to happen, the bottom in tech, in my opinion, was done. And that's why I believe there's still another 10 to 15% upside in tech.
But there's a 10 to 15% upside at a time when a lot of people think that it's already gotten overblown. That said, there are different kinds of job cuts. There are job cuts because you have excess, because you overhired, and because you have a lot of perhaps excess weight. There's also the kind of cuts that come because you see the potential for growth diminishing at a time when possibly you cannot borrow in the same kind of way and there potentially is less demand. And, oh yeah, people already loaded up on devices and on services during the pandemic. How do you distinguish between the two?
Yeah, well, I think you see it in terms like profitless tech and frothy tech. A lot of that really hasn't come back. But I think what you're seeing with a lot of bigger tech, or I'll say like high quality tech, they've cut costs. They were spending like 1980s rock stars. That stopped. And now numbers have stabilized. And also on the other side of this now, you are seeing strong demand that's really starting to come back despite this macro. And I think that's what we've seen with Apple, specifically in China.
When you talk about China, we'll get there in a second. But just going forward, are there any tech names that you do not think will participate in this gain of 15 to 20% as you predicted?
Look, I think when you look at shared donors and when you look at the Ciscos, some of the hardware players, what's really ultimately happening is the likes of Microsoft, you're seeing some bigger tech players more and more, like a Palo Alto and cybersecurity, further expand. And I think the ultimate headline of 1Q earnings is going to be, wow, didn't fall off a cliff. And I view that as more something I embrace rather than fear in terms of 1Q. And right now, look, the New York City cab driver is bearish on tech, and I continue to like that dynamic as it plays out.
Oh, it's time for the gossip hour here at Bloomberg Surveillance, and we can always do that with a well-dressed Dan Ives. A Disney-Apple mating. That, to me, is just like an IB frenzy there. I mean, the lunches at the Sunset Tower Hotel, Mr. Cook's hanging out with Mr. Iger, and they're at the Sunset Tower. Ives is over a couple tables. The bankers are surrounded. Any ability for Apple to acquire Disney?
Look, I think it's a possibility. I think that the difference now for Apple is that this is the first time, I think, really in their history that they're going to have to significantly look at M&A. I think when you look at Disney, I think if TikTok's potentially on the table, depending on what happens with CFIUS in terms of a forced deal, I think this is the time that Cupertino, that's really never done M&A, is going to have to look at this. And look, if Disney comes... That's something that strategically as a marriage makes a ton of sense and accretive.
My take on this, and I'm not going to try to be Moffett Nathanson here or Daniel Ives, is these mergers always fall apart when non-creatives take over the creative process. Do you have the confidence that Apple management can be humble enough to let Disney and the creatives like Mr. Iger be creative?
Yeah, I think that's something that I think uniquely they could balance that, because ultimately, if you look at that marriage, what that could do, Apple and Disney, that would really be the golden goose. And I think something that Apple's been missing, as we know, is content. And that's something in terms of streaming services. That's going to be a $100 billion business in terms of services. I think that's going to be the next leg of the stool. Gurman talks about this all the time. Services, that is the really jewel that I think has been the key re-rating here in Apple.
You mentioned TikTok, you mentioned China, and with respect to Apple, and how much is this the fly in the ointment? We hear that Tim Cook is heading to China potentially in April. This is being reported by Reuters this morning. Is this going to become a liability for companies at a time of increasing tensions between the U.S. and China?
Well, Cook's part politician, part CEO, and I think what he's been able to do as a tactician better than anyone out there is tightrope, because ultimately Apple, it's basically 100% iPhone production, 20% in demand, but that ultimately continues to be part of their success.
Slow news day. You're at 190 on Apple, up 17%. When are we going to get an Ivesy and Lyft above $200?
Look, I think right now...
Come on, I got to make some news, Dan.
In terms of our check, this is a stock that I believe is going to, have, I believe, back to the $3 trillion market cap over the next 3 to 6 months. What price is that right now? Look, I think you start to look at, ultimately, you start to look now, what I believe $15, $20 upside from here, we start to approach $3 trillion.
I didn't get it out of him. He's got compliance on him.
Dan Ives, thank you. That was wonderful.
I
thought that was really interesting, especially given that so many people are shrugging off the story of tech preeminence right now as simply people pricing in lower rates and that pulling the story right back. And it seems like the efficiency story coming in perhaps in a more significant way.
I can't get it. Wait a minute. Qantas, I'm surrounded by Mets fans. I just figured, look at this.
Let's go Mets.
It's a Mets-a-thon. Verlander looked pretty good there.
I think this is the year for the Mets.
Sides.
Are you going, like this weekend or soon with a horde?
I'm going to go crawl into bed and stay there for the whole weekend, like I think everybody in the market is, because I think it's been an exhausting couple of weeks, and I think that I'm looking for, just a dark, quiet space. You understand that, don't you?
We call that the land of the Boston Red Sox. Dan, go away. Dan Ives with us from Wedbush in the New York Mets as well this morning. Futures up 6 down. Futures up. The land of the dark. What'd you call that?
Whatever.
The land of the darkest space. The VIX 19.20. What are we watching into key economic data here in 90 minutes? Something in the vicinity of 4.15% in the 2-year yield. The PCE deflator, important inflation item for the Fed, and that will be front and center as well. And real spending and spending and income and that is savings is going to be a big deal.
It's so funny. We're not talking about the University of Michigan sentiment survey. We didn't even mention it today. I did not mention it because people don't care anymore.
I've never been a fan of it.
Fan or not fan? Jay Powell mentioned it last year and was talking about this as sort of a preeminent indicator. So now we're not moving on that anymore.
In our next hour, first Anne-Marie Horton will be with us on the indictment seen yesterday, the host of Balance of Power, and also a timely guest in the next hour on the nation's monetary policy. Jean Bovin will join us, head of the BlackRock Investment Institute. On radio, on television, Lisa Abramowitz, Met fan. This is Bloomberg.
Fixing things that go wrong and smoothing out bumps in the road is what customers expect from energy providers. And for Duke's renewable assets, that process is overseen from one room in an office building in Charlotte, North Carolina. Brian Savoy showed me around the company's Renewable Control Center.
This is where our operators are monitoring and managing over 5,000 megawatts of renewables across the United States.
How would this differ from like a conventional asset monitoring center?
Yeah, so assets, historically, they would have the monitoring center on site. So you might have an operator with screens, but at the site. Whereas this, we could do 90 sites. There's offshore wind, onshore wind, solar, and they're looking for the smallest change in output because every megawatt hour is money. When one of these assets isn't producing full capacity, we're putting another resource on, and we're having to toggle this on a consistent basis. And this, as clouds come, this is by the minute. This is not, or the hour it's off. No, it's by the minute, and it'll fall, come back, and we have assets that follow this digitally as well, so that we can keep a consistent flow of electrons on the grid.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Bloomberg has the Fed coverage you're looking for. Monday, an exclusive interview with St. Louis Fed President Jim Bullard.
The benefits of getting inflation under control quickly are vast.
For all your Fed coverage, keep it tuned to Bloomberg. Lots happening on Wall Street.
I'm quite encouraged. The center is holding.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
A lot of these areas still have very, very good valuations.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
Now's not a great time to be speculative. It's time for a pivot. We're talking about a significant hit to our standard of living.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio.
Was a clear message from Chair Powell last week that the economic data still matters.
I think the Fed can continue to have the narrative of hiking.
They're really ready to continue to push short rates higher until the household and business pain is felt.
We have this huge disconnect between where the dots are and where the market is.
People are expecting the same sort of performance we saw post-COVID, and I think the conditions are just very different. It's not as supportive for that.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on a Friday, an historic Friday. An American president has been indicted for a crime. We'll touch on that in a moment with Anne-Marie Horton, the host of Balance of Power. Also, we're going to be looking across economics, finance, investment here, end of quarter, and we start strong in this hour with Jean Boivin coming up in 15 minutes.
So how do you parse the strong quarter that we're seeing with all of the increasing negativity, specifically from economists who were speaking yesterday with our own Michael McKee, who is down at the National Association of Business Business Economics, and talking about how really there is a problem, and that was reflected by CEOs, by economists, et cetera, not seeing it in markets.
To me, it's flows as well. The conversation with Nora Rubini at Chernobyl with Matt Miller here earlier this morning, and the mystery in the first quarter, besides where was I in triple leveraged all cash, I should have loaded the boat in NASDAQ, but the mystery here is what are those flows right now within the banking system? Because as we've seen overnight, many of the bank stocks have not recovered like some of those tech giants.
And money just keeps flowing into money market funds. We saw the money market outstandings in the U.S. surge to a record $5.2 trillion, up more than $300 billion since the beginning of this month. That's according to ICI data. We've been seeing this just flood of money shifting around the financial system at a time when it does seem like there is some stability, but not normalcy.
We're going to drive the conversation forward, and we're going to do that at 8:45 this morning with someone I think many of you don't know. Let's introduce right now Susan Collins of the Boston Fed. Her academics is bulletproof. She has just been wonderful at Harvard and MIT and hugely associated with the University of Michigan. is a Grambling professor there, and she brings first-order academics to the Fed as a influential president of the Boston system.
It's incredibly important. Unfortunately, the academic books don't necessarily have a precedent for this and don't necessarily have any models that they can apply.
Not well said.
And
this
I think,
is not in the books.
We're going to be hearing from her. We're going to be hearing about the mystery of some of the banking mystery that we're hearing about, the banking conundrum of money flooding out of smaller and medium-sized banks and what that means for lending, right after getting core inflation data in the U.S. that might show it is not going down. It is still a problem that the central bank needs to fight.
Quick data here before the brief, 4.15% on the two-year yield, essentially 5 days higher yield on the two-year, breaching out over 4%. Futures, what a surprise into the end of the quarter. The view from the triple leveraged all cash fund is higher. Levels in equities, 4,100. SPX, we're not there yet. 33,000 Dow. I can't believe I'm saying this. 13,000 NASDAQ, and we do this with the VIX 19.19. I can't do any more data check. I got this so wrong 90 days ago.
Well,
it's killing me.
So did everybody else. Join the club. Who got this right? Very few people really navigated this in a directional level, maybe moment to moment, and trying to play some of the flows. This is the difficulty right now. How do you cohere the strength that we're seeing in equities with the economic weakness implied by the bond market? At 8:30 a.m., trying to parse through what the reaction function from the Fed is. We get U.S. personal income spending and core PCE for February. These are the key gauges of inflation that the Fed likes to look at. If we don't see an easing, how much does this market have to violently reprice once again back to where it was 3-4 weeks ago?
I'm so glad you bring this up, because nation to nation, we've got headline inflation going in one direction and core going in the other. That's the overall theme.
You have also this rolling recession through different industries that keeps inflation a bit higher overall over the longer term than people previously would have liked. At 11 a.m., the reaction function gets perhaps a little guidance from Christine Lagarde of the ECB. She's giving a speech in Florence. And then today, when you talked about some of the Fed speakers, yes, we do hear from Susan Collins, who will be speaking with Michael McKee at 8:45 a.m. Eastern on Bloomberg Surveillance. Don't miss it. We also hear today from New York Fed President John Williams, Fed Governor Lisa Cook, Fed Governor Christopher Waller, all coming out. My key issue is, how do you know when there's been enough banking stress to offset the power of certain rate hikes that otherwise would have put into place?
We must turn to politics now, and we do that through the prism of balance of power. Last night in the 5 p.m. hour, there was a show. Amory Horton and Joe Matthew decided, well, I think we need to blow up the show for an indictment. How surprised were you? It seems like it caught everybody off guard.
Well, it certainly caught Team Trump off guard. They were not expecting it this soon, but in the sense that everyone knew at some point potentially this was down the road, just maybe not so soon, because the former president said he was going to be arrested earlier this month. He said on that Tuesday, March 21st, I am going to be arrested. And then he started campaigning off of it.
I want you, with your international experience, for our international audience on surveillance, this is New York State, the Southern District of Manhattan. And the other issues that former President Trump has are much more federal tone.
And Georgia.
What's the difference? In Georgia, another state as well. Excuse me. What's the difference there between this case and others that the pros are telling me are actually more important than this case?
Well, this case goes back to 2016, and it's about the former president paying this hush money funds to quiet what would have been a scandal for him going into a presidential election, and this is paying off.
This is secondary to these others that could be coming down the pipe?
Well, I'm not going to say to the American people what they should regard as primary or secondary. What everyone, though, is talking about in terms of the potential concerns of the other cases is because they have to do with inciting the insurrection. They have to do with overturning the 2020 election results. That's the one the Georgia DA is really focused on. And then the final one is, of course, the president, what the FBI found was documents, serious classified documents at his Mar-a-Lago estate. All of that is being looked into. And what you could see now with this indictment, and again, it's still under seal, we have a lot to learn still, is that all of this can coalesce around the former president almost at the same time, because we know the special grand jury that's looking into these other federal cases subpoenaed his VP, Mike Pence.
There are a lot of broader issues that come into play with this as well. You've got the 2024 election. You also have confidence in the political and the judicial system. And I point to the statement by Donald Trump in the wake of this indictment saying this is political persecution and election interference at the highest level in history. The Democrats have lied, cheated, and stolen in their obsession with trying to get Trump. But now they've done the unthinkable, indicting a completely innocent person in an act of blatant election interference. So how does the establishment, and I put that in quotes, how does the rank and file in Congress, in the administration, counter this at a time when what they say will be viewed as interference or possibly self-serving?
So the White House will not say anything. They think that this is more drama for a potential presidential candidate, right? This is not just a former president. This is unprecedented because we've never seen a criminal case against a former president, but he's also a presidential candidate. And he could potentially be facing off with Joe Biden in 2024. So the White House does not want to look like they're trying to impede on it, trying to put their thumb on the scale. And they also think if this is Trump drama, we can run against that. Rank and file Republicans, what does that mean anymore? You have Speaker McCarthy coming out, and you have Jim Jordan, all of these people saying this is outrageous, this is a quote-unquote witch hunt, and this is politically motivated. But what are you going to happen with the likes of others who potentially think this could mean we can move on from Trump and have a potential different candidate in 2024. So what you're going to see is a party that becomes incredibly more divided. The Republican Party is going to become more divided and hardened by this indictment and potentially what Tom was talking about, these other investigations.
What are the policy implications of this, if any? Or is this just a political and judicial drama that's going to play out as a sideshow?
I think there's no direct policy implications, but what you are going to see is that everyone will be talking about this instead of potentially important issues at the moment, like the debt ceiling. We just had Speaker McCarthy say yesterday, if the White House doesn't act, maybe we're going to have a bill on the floor. They are trying to hone in on what they want to extract in terms of spending cuts to raise the limit. But we're not talking about that this morning. That's what maybe some people in America want to hear, right? Are we going to have financial calamity this summer because we haven't raised our debt ceiling to be able to pay our past bills? No, we're talking about the former president being indicted.
But the historic moment that it is, it's clearly on the radar of the American people with the shock that you saw in Balance of Power last night. Julian Zelizer at Princeton, to me, has the high ground on our modern political history. And part of this is scandals in whatever form they are in the historical memory that we have of scandals. We don't need to go into a history lesson right now, but basically this is just a good old political scandal that somehow, what's the but? That's exactly what I want.
Historically, when there are political scandals, you have seen American leaders step back. I think of Nixon. I think of even Al Gore. There was a recount going, and he said, I want to I want to put country over person. And we have not seen that.
And we have not seen it. And Professor Zelizer says that. He says that's the distinctive feature here, is this is a unique moment, Lisa, because the former president has a history back decades where he really doesn't like to step back, as Anne-Marie says. I'm using her words.
Well, no, Josh Green talks about this.
Yeah,
I was just reading Josh Green. We should give Josh Green the credit for this. I was just reading his opinion piece.
Okay,
and that's how he contextualizes it with how this is so different from other big political historical moments in America and how former leaders have handled them and why that is so different with this individual.
So 3-hour Balance of Power tonight?
Only if you join.
Stepped right into that, didn't I? Emery Horton with us with Joe Matthew tonight, and they're working really to get some important conversation and perspective on this moment for the nation.
You know, Anne-Marie mentioned that Joshua Green article, and there isn't necessarily a precedent in the United States for a president not stepping away or backing away to sort of put country first. But there is when you look at Silvio Berlusconi, when you look at Luiz Inácio Lula da Silva, when you look at a whole host of other international leaders. It really raises this question of what does this mean on the international stage as well for the United States?
I agree with that. I do think there's an international ramification to that. There's no question. As you mentioned about the confidence in Washington, the confidence across the nation, I do agree. It redounds across to international as well. We're going to redound back to what we do, which is economics, finance, investment. Jean Bovin will be joining us here. And really someone everyone's talking about exceptionally intelligent use of Mr. Musk's Twitter, and that would be James Bianco.
Connection
Jim
lost.
Bianco of Bianco Research to join us at the 8 o'clock hour. Stay with us. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. As you've been hearing here on surveillance, for the first time ever, a former U.S. president has been indicted. His lawyer says Donald Trump is expected to be arraigned on charges as early as Tuesday. A grand jury in Manhattan decided there was enough evidence to proceed with the case against him for directing hush money payments to a porn star during his 2016 campaign. The exact charges haven't been made public. The former president calls it political persecution and election interference. The White House is taking its strongest step yet in response to the banking crisis. It's pressing regulators to tighten the rules for mid-sized banks following the collapse of two regional lenders. The White House says that deregulation of the banking industry went too far. Finland has cleared the final obstacle to joining NATO. Lawmakers in Turkey unanimously voted Thursday to ratify Finland's entry into the military alliance. The Finnish foreign minister called it a day of joy.
Our military is in a good shape. But of course, joining NATO means that we will be covered by the Article 5. So any difficulties which appears to us or any other NATO country, the whole NATO will defend that country. And in these days when we are witnessing a war in Europe, the Russian aggression against Ukraine, this is a very important step.
Finland has 800 miles of common border with Russia. And Bloomberg's learned that Tesla is looking to build a battery plant in the U.S., and it would likely be a controversial arrangement with China's dominant electric vehicle battery maker. In recent days, Tesla discussed plans involving the company, CATL, with White House officials. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
News breaks. No one covers the world like Bloomberg.
We've never seen anything like it. This was a decision that maybe was the best out of three very bad decisions, but it could prove to be a mistake.
She opposed Powell's renomination. She called him a dangerous man in 2021. And now she is really pointing the blame at the Fed.
We're expecting that she'd be here in Brussels today. This is a meeting that happens regularly, but obviously today it will be all about the banks.
Bloomberg, your global business authority.
From New York City,
In London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this
Is
story.
there the kind of upside?
Bloomberg has the Fed coverage you're looking for. Today, an exclusive interview with Boston Fed President Susan Collins.
Restoring price stability does remain our imperative.
For all your Fed coverage, keep it tuned to Bloomberg, your global business authority.
We're headed towards a hard landing, a credit crunch, and significant amounts of losses, both for debtors that are facing much higher nominal and real rates, but also for savers and creditors, because rising interest rates reduces the market value of their creditors' assets. So you have financial instability, price instability, and economic instability.
He is the great European economist of the study of the economic balance sheet, Nora Robini of Robini Macro Associates, advisor to President Clinton years ago. And all I can say, Lisa, is Robini there from Chernobyl with Francine Lacroix and Matt Miller. And all I could say is he has absolutely nailed, given monetary moves, the balance sheet crisis that can occur. Once again, Robini's just crushed it.
And we've continued to see that. There's question, though, of when it actually shows up in the data and not just on the peripheral anecdotes that we keep hearing. And this, I think, is really the tension right now. It all makes sense. It's a logical argument. And yet we've continued to see profits deliver. We've continued to see the labor market stay strong. When is it sort of okay to look at the now rather than the expected and logical future?
I'm going to bring it into the great zombie roll-up I'm talking about for this year, which is the strong get stronger, as we saw with Dan Ives and Apple. I mean, maybe that's the theme here coming out of this quarter. We've got a really special treat for you right now. This is futures up 8. The NASDAQ futures just turning green as well. The VIX 19.16. So a nice feel to the tape right now before that key economic data here in an hour and 15 minutes. And our treat before Susan Collins and Michael McKee is Jean Bovin. He's head of the BlackRock Investment Institute of Canada, of his work at Princeton, and we're thrilled that he can tie the pieces together for us to enter a new quarter. Jean, I don't want to get into the parlor game of what the Fed will do. You know I really don't like to talk about it, but I do want to get into the backdrop, the cards the Fed will be dealt before the May 3rd meeting. What data is BlackRock looking at so that the Fed can assess the system better on May 3rd?
Well, I mean, to start with the obvious, clearly, I mean, you just mentioned the data released this morning will be the personal consumption expenditure data, and what it's going to tell us about inflation, I think, is going to be a central piece of information. We have been of the view that inflation is very sticky, much stickier than even was, mostly expected in January. That's becoming more consensus now. But that's going to be a key piece. We don't think inflation is stabilizing anywhere close to what the Fed cares about, too. We're more in the 4 to 5% range still to this moment, and we'll see that this morning. That's going to be a key piece. Beyond that, I think they're going to try to look for confidence in the fact that they've stabilized the banking sector side of things.